A guidance cut there, but orders looking fairly strong, so we'll see where that one heads at the start of the trading day. House building, this is such a part of the new incoming Labour government's plans around growing the UK economy. Just what will they do with planning, Guy?
Maybe the 250 is a more exciting story this morning than the 100. Anyway, we are into the opening trade, so let's talk about what is happening here. We are expecting a FTSE 100, which is a global index, so probably has less reference to what is happening in the UK, to open a little bit higher. Europe, early doors, I don't think is really going to tell us very much about how this session is going to develop, though. We are waiting for payroll numbers to come through a little bit later on. We're waiting for what happens with President Biden. We're waiting for the outcome of the French election. All of that still needs to be ultimately priced in. But early indications out of Europe, we're green. That seems to be the narrative. Stability maybe is the operative word. First thing this morning, change and stability, maybe change to stability is the narrative, certainly when it comes to the UK. So there we are. We have a full house. They're all higher, but they're not up by much. So, Creddy, what are we seeing in terms of the detail?
Yeah, let's dive right into the FTSE specifically, because to your point, it is green on the screen. But again, not major moves to the upside when you look at the index level. And even on an individual micro level, Anna, you aren't seeing a ton of major stock moves in either direction. Really kind of a little bit of a waffly move, for lack of a better term. But if we talk about outperformance in terms of index contribution, it goes actually to healthcare and banks. So I'm curious what that trade is.
Right. Yes. I mean, maybe there's growth expectation in the banks, but that banks were doing well yesterday, so that's interesting. They continue that. But here, yeah, talking about waffly moves, you're right, Guy, that the FTSE 250 should be our focus, but it's just pretty flat. I mean, it's down, but it'll show up red, but down by not even 0.1%. It's just going nowhere. There's just people were expecting this move on. Appears to be the story on the bond markets. UK bond markets opening very slightly higher. The UK 10-year yield dropping. It's 4.175 is where we are right now. So a small movement in yields, very much in keeping with what we're seeing around the rest of Europe. Not a UK-specific story. No,
it doesn't appear to be. Staggeringly... Oh, we've had so much time to price this in, so I think it's just staggeringly boring.
Yes.
Which is what we want.
And we're not used to that after the last 10 years. But I mean, I'll take it. It's a bit of a rest.
I think that's it seems to be the message we're getting from British business this morning as well, that is ultimately what it is looking for, some stability.
Yeah.
A sense maybe of stability that can last. You kind of... It feels like even weeks of stability would be kind of a change at the moment when it comes to what is happening with British politics.
And even if that comes at the cost of the short term, they'll take some short-term pain, but really prizing that long-term stability story.
Yeah, it does. And we should take a quick beat really quickly on what the rest of the continent is doing, though, because it is still your ASMLs, your Novo Nordisk that are moving the stock 600 higher. You are seeing, however, some weakness in the likes of Maersk and some of the energy names on the continent that you're not necessarily seeing in the FTSE 100. So a little bit of divergence there. But again, I wonder how much of this is really that political read-through that we're expecting this weekend.
I read Sharon Bell's note this morning, as I always do.
Religiously.
And looked at the details and tried to figure out exactly what it all means. And I got to the end, and she talks about politics. Sharon Bell joins us now from Goldman Sachs, European strategist, equity strategist, to give us her take on all of this. Is boring enough for British politics this morning? You talk about the fact that political outcomes are not likely to tackle rising deficit levels. And that's going to dominate. But is boring enough this morning from Britain?
Boring enough to move a lot today? Probably not.
No.
Because, as you say, very well previously, this was expected. All the polling data, this is in line with really what the polling data was suggesting. So the market should have priced it in already. But I think boring in terms of reducing the risk premium people put on UK assets, reducing the volatility maybe of the UK, which has been very high in recent years. That will be helpful.
So does the UK assets, on the basis of the fact that we're not seeing that stability elsewhere, outperform from here?
I think, by UK assets, there's two types of UK assets, and I think we mentioned it before. There's FTSE 100, super international. If that outperforms, it outperforms because commodity prices are rising or interest rates are going up and the banks are benefiting, which is a very different scenario than, say, UK domestic stuff, which is more reflected in things like the FTSE 250 or home builders, for example, that would more reflect the politics going on in the UK. And look, I do actually think those domestic slices, with maybe potentially a little bit more growth, we upgraded our GDP forecast for the UK this morning, but just a tiny little fraction. So,
I'll take it.
A little fraction more growth, that would be helpful for those domestic bits of the market.
And so, Sharon, so there we are. There's the UK story. Maybe time to think about France then. Move on to what's happening on Sunday and French stocks. I was reading Morgan Stanley just a day or so ago saying buy French stocks ahead of the election. Others saying they're ready to come in on Monday, maybe, but not just yet. We haven't clawed back all of the losses on the CAC 40 since Macron called the election by any stretch. What is your stance on French stocks?
I would not expect us to claw back in any short-term sense all the losses that we've had because, the previous status quo, I think, is extremely unlikely. And look, whether you see a more, whatever the outcome is, let's say this weekend, you're not going to get back to that. And I think the necessary reforms in order to bring down the deficit are much less likely to happen. And all of that increases people's worries and risks about French, so used to the UK politics. I'm afraid.
Slip there.
French sovereign debt. So, the kind of environment we're going into is one of a little bit more uncertainty for France, let's say. So you don't really claw back all of those losses.
Even if we get a hung parliament then in France, have we passed the that risk premium across the channel?
I think a little bit that has happened. I mean, the UK has seen, I would argue, 8 years of this higher risk premium, more volatility, more uncertainty, etc., particularly on the policy and political front. Lots of different leaders. And we're going through a little bit more uncertainty in continental Europe in general, I would say. Europe ex-UK. I mean, France in particular, we're seeing it at the moment. But you've seen, I think, the most recent elections, the EU elections as well, saw a rise in the far-right parties in lots of different places. So absolutely, little bit more political instability,
So political instability in France, perhaps a little bit of calm here in the UK, but it feels like net-net when it comes to the markets, the idea of a hung parliament or gridlock in France or even this kind of sea of calm in the UK is a positive. I'm curious about that lack of change, for example, that's so expected, or this idea of very little volatility, as you point out. Does that set us up for big shocks, though, when it comes to the way the markets react to certain policy changes?
Yeah, look, I think to me the big sort of political question and the volatility for Europe is not just its own domestic political elections; it's also what's going on in the US. And if you see, for example, a Trump victory, a more Republican clean sweep over in the US election, then I think the concern for me for Europe is that means potentially tariffs. It means potentially a sort of policy hit in that sense, not coming from Europe directly, but coming from the US. So yes, look, I think European stock markets have done reasonably well this year, not as well as the US. I don't think it leaves them all that vulnerable because if I look at overall valuations, they're not super high. If I look at earnings for companies, what we would call fundamentals, they've been pretty good too. So, not super strong markets I wouldn't expect from here, but not a big correction either for Europe.
All right, Sharon, hold that thought. We want to come back to the geopolitical story. Just some headlines crossing the Bloomberg terminal at the moment that Rishi Sunak will be making a statement at about 10:30 a.m. UK time, and of course, incoming UK Prime Minister Keir Starmer making a statement at about 12:20 p.m. time. So we will bring you those headlines as we get them and what they have to say about the future of the UK. But let's bring that you back into the conversation here. When we talk about the future of the UK, when is it too early to start pricing in tariff changes? Policy changes, specifically in the relationship with the states?
Yeah, I think the market will turn now to looking at that. You've already started to see that in my conversations with our investor clients. It's really the number one that's coming up rather than, say, the UK election, which felt like a foregone conclusion. With respect to France, there is still obviously uncertainty there. But yes, the US and the elections there, I think the TV debate that we had also brought that into focus too. And Europe is essentially, as an economy, a large open economy. It relies on global trade. And if global trade is squeezed further, then I think that puts more pressure on Europe. So there is definitely concern by clients on this. But as I said, some of that is priced. You're not looking at a market in Europe that's as expensive as the US.
You mentioned the TV debate over in the States. How much did that really change for the folks in the markets? I know we're all watching the political rollout, but how much did that really change from an investment standpoint?
Yeah, I just think, again, it highlights, you mentioned timing. The market tends to be quite myopic and focus on certain things at different times. And it often needs to get closer and closer to an election before the market starts saying, OK, we now can consider the pricing some of this risk in. And I think, again, the TV debate focused people's attention on the US election and also the potential impact it might have more broadly outside of the US and on Europe especially as well.
So we're focusing on the politics. Anna mentioned it earlier on. Normally on a day like today, all we'd be talking about is payrolls.
Yeah.
We're not. We're waiting to see that data, or maybe that's actually turns out to be the big narrative today. But it does seem as if the data is sort of taking a back seat at the moment to a certain extent. Nevertheless, the market does seem to be trading around this whole idea that bad news is good news. Equity markets seem to be trading on that. Are you comfortable with that?
I agree with that. And we are a little uncomfortable with that. It can't last forever. Ultimately, bad news on the economy is bad news. But I can see a little bit in the short term, this window of time now, where what the market would love to see is more rate cuts and more assurance that you're going to get rate cuts. Yeah. A weaker payroll figure, which is bad news from an economic perspective, may be seen as good news from a market's perspective. But yes, more medium term, if you keep getting weak data, then people will start worrying about the growth narrative out there.
Looking at stocks more globally then, Sharon, we haven't seen a 5% pullback, you write in your notes, since the correction of the second half of last year. So we're overdue one. Yeah. But you also point out that it's unusual for the second half to be that bad when the first half has been this good. So where does that leave us?
Yeah, look, I think what we're pointing to is the fact that we've had a lovely period for the market, as you say. We've had no big corrections, with the exception of small pockets, like you mentioned France before. But with the exception of small pockets globally, we've generally had very good markets, and particularly in the case of the US. And the US market we know is very expensive. And we do have lots of risks on the horizon, economic ones, political ones. So all of those things make the market a little bit more vulnerable, I think. You've also seen some of the very biggest stocks in the US, which the US market is now super concentrated in those names, being quite volatile too. And all those things sort of just up the concern that we might see a little setback. But without a recession, you don't tend to see a really big bear market.
Okay. On that note, we'll leave it. Glass half full, it seems, this Friday, going into that payroll number. We'll see what that data delivers and what the CPI number delivers next week. Sharon, nice to see you. Thank you very much indeed for joining us. Sharon Bell, Goldman Sachs, Senior European Equity Strategist. Quick look at the Core 6. This is what's happening this morning with the major stocks in and around Europe. As you can see, largely positive, but not by much. We're seeing limited gains. Ferrari, just a little bit of softness maybe there, but the luxury stocks broadly seem to be a little bit higher, as do the chip stocks. Look at ASML this morning.
Yeah, lifting the broader index as well. Let's get a check on some of the other individual stocks we got our eye on. Joe Easton standing by. Joe.
We are actually seeing some small gains in the UK house builders today. It's a pretty flat market overall. So actually, some of these are the best performing stocks on the entire Stock 600 today. The likes of Persimmon, Vistry, Taylor Wimpey as well, gaining around 2% across that sector. It's a bit of a relief trade, according to analysts over at RBC. With the election out of the way, now the focus turns to potentially increased housing supply under Labour, and therefore we are seeing some gains there at the moment. The utilities outlook I also flagged as one to watch. We're not seeing huge movements in that market. Potentially that is more priced in, given we know the kind of policies that are going to come in terms of both water and also the GB energy element from Labour. We've not had too much detail on that at the moment, but it is a bit of a risk. Now seeing a bit of a gain in some of the firms. The water company Pennon doing okay, and also Scottish Power up around 0.6%. Not too bad in terms of some of those domestic stocks, but a lot of that priced in, of course. We'll flip over and look at Glencore. News broke overnight that Canada has approved the company's purchase of Teck's coal business. Now, the market didn't really like that deal. They said it was too expensive, but it's been an overhang on Glencore for a few months now. So it looks like we might get some relief on that news, and therefore we're seeing Glencore gaining 1.6%. I brought up Amplifon. This is a hearing aid company over in Italy. We're not entirely sure why this stock is hit today. It's down 6%. We don't see ratings changes. We don't see a warning from the company, but it is a noticeable underperformer. So I'm going to keep my eye and ask my trader contacts what the movement is on that one going forward. Then we'll look at Ikestron. Now, this is something you don't see very often, a profit warning and a 20% share price jump. Now, the orders looked a little bit weak in terms of the lead times increasing. Therefore, they haven't been able to get those chip machinery orders out to their chip clients. But the order backlog is actually better than expected. Analysts saying it looks like a small upgrade to guidance on the order backlog, and that stock is down sharply over the past few years. So we're seeing relief there. That one gaining 19%. A bit of a movement higher, and ASML, ST Micro, Infineon getting a positive read-through on that one at the moment. Those are the stocks that are moving right at the open. Ikestron catching me by surprise. That 18% share move, the best gainer on the Stock 600 this morning.
Joe, thank you very much. Joe Easton from our equities team. Coming up, we need to take ourselves across the channel. We were just talking about this with Sharon Bell from Goldman Sachs. Have we handed that sort of baton of uncertainty over to the French political landscape here in the UK? We'll get to France shortly. France entering the final few days of campaigning. We'll discuss the challenges Marine Le Pen faces. More on this next. This is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Was going to keep reading World Cup. This is a 3
as the economic picture,
covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Well, frankly, it's miles away, right? So if you look at this from an Italian perspective, I think there's always been some sensitivity, some thinking that if you saw the BTP spread up at around 300 basis points, you actually start to reach a level at which you start to question fiscal debt sustainability.
People would love, to get, 70 basis points extra spread compared to the bond without tail risks, with the expectation that if really things go wrong, the central banks will intervene. I mean, this sort of moral hazard is, I would say, unacceptable.
Bloomberg guests, including Peter Pratt, the former ECB chief economist, of course, Mark Dowding over at Bloomberg Capital, I believe, talking about the risk of that intervention coming from the ECB if we do indeed get some sort of volatile market reaction off of the French vote. Let's get more on that political landscape. Bloomberg senior editor on EMEA markets, Phil Serafino, joins us from Paris. Phil, walk us through where we stand going into the last day of campaigning.
Sure. The polls have been pretty consistent this week. It's looking like Marine Le Pen's far-right party, the National Rally, will not get an absolute majority in Sunday's elections. You need 289 seats to have a majority in the National Assembly. The latest polling shows her party getting anywhere from 190 to 250 seats. She was on TV this morning making her last pitch to voters. Today's the last day of campaigning. And her message was, look, don't necessarily believe the polls. Predicting the seats in a big assembly like this is not an exact science. She points out that in 2022, pollsters showed her party winning about 40 seats in the assembly. They ended up doing much better than that. So she says, A, don't believe the polls. B, she's also saying, look, it's either me or it's going to be gridlock. If her party does not get an absolute majority, it's going to be very difficult for anyone to form a government. So she's saying me or gridlock. That's the message she's putting out.
Let's assume that the numbers are kind of roughly right. Let's assume she's in the, let's call it the 230s rather than the 280s. Who runs the table next week, Phil? Does she run the table in terms of how that kind of the next political processes unfold? Who runs the table? Is it Macron? Just give us a sense of how this is going to work out.
Well, the Constitution says Macron appoints the prime minister, but he needs to face the political reality. Any government that he appoints needs to be stable. It could face no confidence votes if it doesn't have majority support. It's a real question. France has not faced this before in this current configuration, where no party's going to have a majority. The parties are very fragmented. The far left and the far right do not have much love for each other. And even Macron's centrist party, is just going to find it very difficult to build a coalition. So completely unclear what happens Monday morning when they go to try and form a government. You have the Olympics coming up, this big event on a national stage. Who's going to be the prime minister? Who's going to kick off the Olympics? There's going to be a lot of horse trading come Monday morning, assuming the polls the vote turns out the way the polls indicate.
Yeah, and it's interesting that the National Rally's Bardella had said previously he didn't want to be prime minister if he didn't have a majority. I think they backed away slightly from that a little, saying, well, if we're close to one, then maybe. How are the markets going to be taking all of this then, Phil?
The markets, if you look this week, it started to price in this outcome. Investors we've talked to are basically saying, look, given this situation, the best possible outcome is a hung parliament. France will muddle along. The big concern is about France's debt load and getting that under control. It will be difficult to do anything radical if there's no majority party in parliament. So investors are at least comfortable with the fact that there won't be a massive change. But certainly Macron's business-friendly policies, his reforms, those are kind of off the table. The worst outcome that the investors see from the left and the right, those are off the table as well. You have the 10-year spread up there on the screen. That has come down a little bit as investors have started to accept the fact that, the worst possible case is not likely to pass. But what the outcome is going to be, no one really knows. So you're looking at probably fairly volatile days, at least next week, while they try and figure out who's running the country.
Phil, thank you very much. Thanks for joining us. Bloomberg senior editor for EMEA Markets, Phil Serafino, joining us there from Paris with what we are looking ahead to. That's the look ahead in Paris. Let's get a look ahead on US politics as well. US President, of course, Joe Biden, he's heading into what could be the biggest weekend of his political career. It's certainly a very big weekend as he works to restore the faith of voters, donors, and party officials. So far, Biden has refused to step down following his debate performance, which raised concerns around his health. Bloomberg managing editor for Breaking News, longtime Washington watcher, Derek Wallbank joins us now. Derek, good to have you with us. It certainly didn't feel like a public holiday yesterday in the States. There was plenty for those in Washington to focus on. Still no movement from the White House. And now we all focus on this interview he's going to be giving later on today, Friday evening, our time here in Europe, or into the US evening. What are you going to be watching for?
Well, that's exactly right. I don't think there was a single political reporter or political staffer in Washington who took the day off yesterday. I think, look, you're walking into what can accurately be described as a make or break weekend for Joe Biden and his his hopes of election. Right? He's got a big interview with George Stephanopoulos of ABC that is set to air. Originally, this was supposed to be airing on Sunday morning Washington time. That got bumped up by ABC, actually, so it's going to be all airing on Friday Washington time. There'll be some excerpts that come out during the evening news program, and then it's all going to air all together at 8 o'clock D.C. time. So 8 o'clock in the morning here in Singapore on Saturday and overnight for European viewers. But that's going to be, I think, very keenly watched. You know, Biden had events today. He had some local interviews, some radio interviews. He also hosted military families to watch the 4th of July fireworks at the White House. All of those things not without some little misstep, but not, you know, of a major sort of grade as we saw during the debates. But I think, you know, these are going to be very, very closely watched. A lot of times when you're talking about big sit-down interviews with the president, you're looking for details on policy. This is really going to be a lot about eyeing Biden, kind of seeing where he is and getting a sense of that sort of situation. And Biden, look, let's be clear, has a lot of restiveness within the Democratic Party, even though senior leaders have not said so openly yet.
Derek, there's a lot of buzz here in Europe, and I would argue globally, even within the States, of whether Kamala Harris can take over the Democratic nomination. But she didn't poll that well, especially against President Trump back in 2020. Is there anything that might increase her odds this time around, not against Biden, but against Trump?
Well, if you look at her separately, and let's stipulate a world, which still is probably a little unlikely, but let's stipulate a world in which all of those events do happen and she's the nominee. First off, she's the most likely person if it's not Biden because of the simple fact that she just went through a process where she was going to be the VP nominee and everybody voted for that ticket, right? Secondly, there's an issue of campaign funds. They would sort of neatly transfer to her, whereas it would be very complicated otherwise. So for a lot of reasons, if it's not Biden, it's probably Harris. Harris is polling a little bit better than Biden is right now. You know, she's had some difficulties through her vice presidential tenure, but right now she's polling a little bit better, and that's animating Democrats calling for change.
Derek, thanks for the update. Derek Wallbank, thank you very much indeed. We'll look forward to that interview a little bit later on. Coming up, we'll turn back to the UK political scene. Mike Gregg's going to join us. Looking forward to that conversation. This is Bloomberg.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is the opening trade. We're about 30 minutes into today's session. Seeing some green on the screen. When you look at the equity markets, green on the screen, the currency markets as well. But let's get to our top story. Labour has ended 14 years of Conservative government in the United Kingdom. After a landslide victory, leader Keir Starmer is set to become Prime Minister, with his party winning more than 400 seats in Parliament. That makes the biggest majority since 1997. Let's get more on the story. Bloomberg's UK correspondent Lizzie Burden standing by at Downing Street. Lizzie?
Well, Critty, it ends as it began, in the rain in Downing Street, and it's been a dramatic night. Even Liz Truss booted out. You haven't seen a former Prime Minister rejected by election since 1935. But this is a day of historic change for Britain after an extraordinary turnaround for the Labour Party. They had their worst defeat since before the Second World War 5 years ago, and now it looks like they're on for the biggest, second biggest majority in history. But look, the comparisons to Tony Blair have been made, but it's a very, very different Britain to 1997. Infrastructure is a mess. Productivity is horrible. And the mandate, don't be fooled by this majority, because the vote share beneath it is unlikely to reflect that Keir Starmer has the country with him. Back to you, Anna.
Thank you very much, Lizzie. I feel for you, your voice, and see how it holds up all day. In the rain and with no voice, Bloomberg's UK correspondent Lizzie Burden at Downing Street, at least bringing us a flavour of what's happening there. Rain is how it started and how it ends, it seems, for Rishi Sunak. Mike Rake joins us, former chairman of BT and also former CBI president. You advised the Liberal Democrats on some business policies. Important to say, perhaps, this morning. Mike, very good to see you. Thank you for joining us. So we sit here then, big majority for the Labour Party, in echoes of Tony Blair, and they're limited back to 97. But we heard Keir Starmer say this morning that majority comes with responsibility. What would you like to see them responsibly do for business? What should the priority be?
I think the single most important thing is restoring growth, is restoring productivity, excuse me, is encouraging investment. And that is what, they've been talking about. And I think where they were very strong, the Labour Party actually in putting out their position, is what is really critical is growth. And the only way out of the position we have, where we're reaching the limits historically of what we've had from a debt point of view, where we're reaching the limits of what we've had from a taxation point of view, our public services have been underfunded, we've got huge issues of infrastructure, as we know, and the only way we can get that really moving is growth. To do that, you have to encourage business. you have to encourage investment at every level, inward investment, domestic investment. And it's critical that we have policies that facilitate that and don't get in the way of that.
Right. And so how do we encourage that investment? I mean, post 2016 with the Brexit vote, a lot of UK businesses were pretty nervous about the future.
Yes.
We saw investment drop as a result.
Yes.
How do we get that back?
Well, I think there are several things. Clearly, Brexit has proved to be worse than most of us could have imagined it could have been in terms of cost to the economy, frictional costs, reputational costs, lack of access to markets and so on, has not helped in terms of investment and productivity. Investment's 30% down. But I think there are two areas that I hope the Labour Party will really work on to live up to what they've been saying. One is to make very clear that significant increases in business taxes will absolutely undermine the message that we want to go for.
And they've said no on corporation tax. They won't put that up, but...
Well, yeah, but I mean, you could argue maybe there's an argument to put corporation tax down a bit. I mean, it's quite high at the headline level. That's an important aspect in inward investment, but definitely it shouldn't go up. I think you have to be very careful not to raise other business taxes, be careful of unintended consequences. For example, a lot of rumors about increasing capital gains tax. That could be very damaging to domestic investment, very damaging to inward investment. I think be very careful about how you actually implement the rules of non-dom. Understand the political issue, understand that Conservatives and Labour wanted to move on it. Be very careful, but I think make those statements to make business believe, foreign and domestic, that they're going to live up to that commitment for growth and working with business. We then, business, have an obligation to invest to improve productivity. But the other thing that's really important is we have to re-engage with Europe in a sensible and constructive manner. Now, there are statements that have been made about we're not, even I don't believe we're going to get back into the European Union, in my lifetime, certainly. But I do believe that we need to stand back and do what's right for the country in terms of relooking at the customs union, which nearly went through by one vote, by the way. So I can't see any reason not to do that. I think we should reconsider looking at how we work on the single market. It's not only 45% of our trade, by the way, directly, but indirectly with third countries. With deals with Europe, it's more like 60%. So, we have to comply with those standards. And we've really got to be a little bit, pragmatic about doing what makes a difference to growth, which will translate into the revenues we need.
Can we have an interventionist, business-friendly industrial policy?
I believe that you can absolutely have an industrial policy,
Okay. Intervention. It feels like they want to be a big part of this story. They don't want to sit back and have a light touch. It's we want to play an active role. That seems. Is that something that business would welcome? Is that something that will work? Is that the right approach?
Okay. So the way I would look at that is what's necessary is broad encouragement to support industries in key sectors, particularly since we left the European Union. So there are some key areas that we really need to think about how we support them in a sensible way. So how can you have manufacturing without steel, for example, a modern blend of steel? There are areas where we need to be.
Right.
We need to be able to build on the things we're really good at.
Government is necessary.
I think government is really necessary and should be working together with business, together with the CBI and other business organizations to work on those things that really make a difference. And by the way, I think the other thing, which is a lot talked about and nothing done, is the regulatory burden in the UK has become very high. An exit, I don't want to go on about it, but the exit is just increase the burden of regulation, increase cross-checks at the border. Something has to be done. In the financial services sector, we've seen some bleeding, not huge, of things moving away from us. We need to reestablish that. The stock exchange is really not, is really declining very fast, and we need to pay attention to that. And regulation needs to, yes, protect, but also encourage investment and competitiveness in doing it. This has to move forward as well, because really very little has been done in substance in the last 4 or 5 years.
I go on and on with you about regulation. Don't get me started. But let's talk a little bit about what's going on in the U.S. political scene. You mentioned manufacturing. You mentioned steel. Can Keir Starmer Trump-proof the United Kingdom right now?
Wow. Look, I mean, it's a difficult question because for me, I think you've got U.S. politics is particular. And I think in a way, I think a lot of people I know in the U.S. in business separate, if you will, how shall I put this, the democratic issues that they concern Trump and the way the Supreme Court has been moving, as opposed to how you encourage business.
Yeah. So
I think in all fairness, as you know probably better than I do, a lot of business people reluctantly believe that Trump would be better for the economy, but worry about what that means for the democratic nature and history of the United States and where that takes it. So I think it's a bit of a complicated equation. Similarly, whether we like it or not, there are a lot of people in the UK who are deeply worried about immigration. You know, we may have our views about the need, the process, and so on, about the attractiveness of it, but there are a lot of people who are deeply concerned about it, and we have to respect that.
An ongoing conversation. Mike Rake, we have to leave it there. Former chairman of BT Group and former president of the CBI. We thank you so much. Plenty more ahead. This is Bloomberg.
What are you most worried about in the global economy now? Is it the geopolitical environment, U.S.-China, Ukraine? Is it inability to pass the debt limit extension? What are you most worried about?
I think most of the time I would answer the same way, a financial crisis. As a human, I worry a lot about the Chinese invading Taiwan and World War III coming on. But in that case, I don't think whether you invest with David Rubenstein or Cliff Asness is the really big issue. So I think a financial crisis I worry about because they're very unpredictable. After the fact, everyone predicted them. But before the fact, they're not very predictable. I don't think anyone wants a financial crisis. You think you'll do well, and something happens that boomerangs, and you don't.
Well, as we talk, we've seen Silicon Valley Bank basically go under and have to be bought. And there are other banks that have some challenges. Are you worried about a banking crisis or not so much?
Worried enough to put it on my worry list. I have no special knowledge of banks, commercial real estate and banks that deal in that, maybe a more nerve-wracking place, how that shakes out in cities. So, yeah, those things worry me, but not especially more. I think even before SVB, I would have said financial crisis is a very low probability. When someone says their biggest worry, doesn't mean they think it's likely. It means they think it's possible and would be terrible.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Minutes into the equity market session. It is Friday the 5th, the day after the UK election, and the UK election is having something of an effect this morning. I'm struggling to find it. I'm sure it's out there somewhere, but as you can see, the FTSE 100 in terms of the assets that are moving this morning, not really doing very much. In terms of the house building stocks, they're not doing a great deal. The reason for this is really straightforward. And that is that most of this is largely being priced in. So we are seeing a little bit of a pickup. We are seeing a little bit of outperformance in the house builders this morning, but it's not dramatic. This isn't a surprise. Nobody really didn't anticipate that we would see a Labour Party government at the helm of the UK. So let's talk about this critical sector to the UK and where it goes next. We're joined now by Justin Young. He is the CEO of the Royal Institution of Chartered Surveyors. Surveyors, obviously, deep into the weeds of how this process is going to unfold, and Rix has been leading the charge in terms of how the process is going to unfold with a Labour government, putting out policy papers left, right and centre. Justin Young, nice to see you. Good morning.
Good morning, Guy.
Let's talk about kind of what happens next. The Labour Party talks about wanting to hit the ground running. Previous governments have wanted to do a lot with housing. The Labour Party wants to build 300,000 houses a year. It wants to do 1.5 million over the course of the parliamentary term. How quickly can that process actually unfold? Is that going to be backloaded? Is it something that's going to happen instantly? When they talk about hitting the ground running, what do you think they actually mean?
So there are going to be a number of preparatory stages to get through that, because, of course, one of the first things you've got to do is unblock the planning system. And that's then going to allow those houses to be built. It's a huge target, 1.5 million.
Yeah.
You know, but it's also going to need some leadership. So the great thing is that Labour have elevated this up the agenda, and so it's really up there at the top. Question is, though, is it high enough? You know, should we be having, for example, a Secretary of State for housing if we're really going to be serious about tackling this issue? But the planning piece is where it really starts. If you can unlock the planning, then that means that the speed can increase. And the decision-making, Labour talk a lot about putting those decisions into the hands of local authorities. That's got to be good. That's where the planners need to be. They've also talked about 300 new planners. Okay, great. But to your point, you know, that's going to take a bit of time. It's a complex job. You can't learn it overnight.
Labour, ironically, feels like it's central to this issue. We can talk about the plans that we have to build houses, but you need the people to plan for that process, and you need the people to build the houses. And it seems that is where the shortages lie. What do we need to do on that front? You talk about the 300 planners that are coming in. That's not something that's going to happen instantly. How quickly can you recruit and train? But we're also short of brickies, sparkies, plumbers, you name it. Absolutely. There are shortages absolutely everywhere.
Yep, quantity surveyors as well. So, you know, as you say, across the
Ironically, we don't have a quantity of surveyors.
There we go. So there are absolutely shortages across. And this is where, again, with the majority, a bit of joined-up government can happen. So what we really need to see is that kind of cross-department skills task force, if you like, that gets Department for Education joined up with whatever DLUC becomes under the next government, and then actually putting a proper plan in place. Because we don't start early enough. We don't talk into schools. We don't have a built environment GCSE, for example. So how are we attracting, you know, younger students into this world? There is one actually, a GCSE in Wales, but, you know, not in England, not in Scotland. So, you know, we should be looking at those sorts of things, as well as the tertiary education, to get people interested into the built environment and deal with this particular problem. But I think it's now high enough up the agenda that we can start making some of these things happen, and the majority for Labour allows them to push on that way.
I want to bring it back to the supply story. Guy mentioned the 1.5 million over the parliamentary term. What are the milestones to getting there, though? When do we see early signs that we are on track for that goal?
So I think you'll see pieces around, you know, are the reviews being done, not just the reform of the planning system, but, you know, are the reviews being done by local authority around their green belt land, for example? So some of those reviews haven't been done since the 70s.
Yeah.
And we've now got to look at, right, what's green belt? What is now this kind of new term grey belt? So much infrastructure has been built since the 70s. Towns have expanded. You know, the shape of the landscape has really changed. So there's the opportunity then to put this new housing in places where local communities are not going to put up so many barriers to those houses being built. So that would be a really good example. Those reviews done, targets accepted. The local authorities have got to build those targets themselves. Of course, it's top down. You've got to get that acceptance in there as reality. And then some more of these skills coming in. How do we get those skills into the construction sector very quickly? You know, we're talking about house building here, but we haven't even of infrastructure in the pipeline.
Talk to us about the trade-off, perhaps, between renting and owning, specifically when this renters bill may come back. How does that show up in housing space?
Sure. What we're seeing at the moment is certainly private landlords coming out of the sector. It's not a mad rush, but you can see that's beginning to happen. So, of course, the squeeze is now on the rented sector. And what I'd really like to see is some incentivization around the build to rent. And let's put some incentivization there so that we can grow that. Renters are being really squeezed at the moment. You know, I see this with my own son, 26 years old, in London. You know, 50% of his salary is going on to his rent. It's really, really tough. So more build to rent, that means there aren't the supply will still be there. And anything that's shifting over into the sort of the home ownership part is more compensated by new build to rent.
terms of the infrastructure, you mentioned it just a moment ago. How do we treat electricity companies in order to get them to deliver what we need in terms of infrastructure? There's a lot of focus on sewage at the moment. There's a lot of focus on the fact that basically the system has been overwhelmed. How do we... Can you give us a sort of sense of the sequencing that now needs to happen and the kind of the behind-the-scenes stuff that needs to happen in order to build the houses that we need? Because at the moment, I hear again, you're struggling to connect to the grid. You're struggling to connect to the water system. How much of that stuff, how far behind are we on that stuff at the moment? And how big an impediment will that be to creating and hitting these targets?
Yeah, so that is an impediment, absolutely. And as you say, you can hear any number of stories of trying to get a completed development connected up. So it's got to be this parallel approach of course the houses, but that infrastructure at the same time. And so again, I think what we can do with a majority government is push those utility companies to put more investment into the infrastructure that is required. So again, I think there's this broader approach which is going to push both of those elements forward at the same time. And that's, of course, where the government funding is only going to go so far, and that's probably going to be focused around a lot of social housing and that sort of thing. So it's private investment that is also going to need to be brought into play here. But I do think that with a strong majority, there's more stability then for the country. So things are looking better for the investment. And if you unblock the planning system, then residential real estate and infrastructure becomes really quite an attractive asset to invest in if you're a pension fund or whatever. And you might look at UK sort of more broadly as a result of this election. Think where we're at now with the inflation targets. Yep. You look at America and you look at what's happening there in a presidential race. You see what's happening in France in terms of the move to the right. And actually the UK is looking quite good for investment. So if we can attract some of that inward investment, then I think that really helps to accelerate what we're trying to do around house building.
But how much of that is a negative when it comes to, I can understand the idea of attracting investment, but doesn't that also drive up pricing and prices as well from kind of the international buyers that are looking for that? So it almost feels like for the domestic, and correct me if I'm wrong here, I'm kind of game theorying as I speak, but it kind of feels like for the domestic homeowner or prospective homeowner, having stability and attracting that international bid may actually be a bad thing. Am I thinking about that right?
Well, it's always going to be a trade-off, isn't it?
Right.
Because, as you say, if the UK becomes an attractive place for inward investment, then that's not just the investment around construction and making everything happen, but then it becomes more attractive for people from outside to actually purchase what is being built. So, again, with a majority, does that mean there can be some, legislation put in place around, the amount of foreign ownership that we're comfortable having in the country? I think that's all the sort of discussion that should be on the table.
You sound like you're speaking as if you want the Labour Party to make unpopular decisions. Is that kind of what is required here?
I absolutely think it is. If you think about targets that have been set previously, and I know previous governments have sort of stepped back from targets themselves, but Labour are really being bold on this, and their ambitions are very strong. So they're going to have to make unpopular decisions. They've almost got themselves into a corner. But it seems to me, all the rhetoric today is they're up for that. It's very much the message I'm getting.
Just final question: how achievable is 1.5? 1.5 million houses over 5 years.
It's a tough one. It can happen. Again, for me, it's around the leadership and the connected nature of coming up with the answers. So all the things that we've talked about, been around planning, it's been around skills. We haven't even talked about materials or anything like that. But there are so many connected pieces that they will have to look at every single one of those to make the answer and get to that target and make it achievable. Hence why I think it's got to be a Secretary of State position. It's got to be a cabinet position.
Okay. Is it going to be backloaded? I'm trying to work out what the economics of this ultimately look like. 5 years, we've got a 5-year block, 1.5 million houses to be built. There's a lot of balls that a lot of plates that need to be spinning to get that process to unfold.
Yeah.
Any one of those plates crashes to the ground, the process comes unstuck.
Yeah, direct answer to the question, it is going to be backloaded. I mean, I absolutely see that. what the potential we have now is there could be 2 terms back to back of the same government.
So do you think that's really where I'm going here? Do you think that the second term is necessary? Once the momentum starts to build, actually this target is more achievable in a second term than it is in a first term?
You'd like to think that actually if the current target is 1.5 million across the first term of a government, that it wouldn't just be 1.5 across 2 terms. You'd get more in that second term as well. I think they need a second term to really make that big target.
All right, Justin Young, the CEO of RIX, we thank you so much for joining the program, walking us through a crucial housing story we're going to be monitoring, of course, in the first 100 days and throughout this parliamentary term. Let's talk about what else we're going to be watching on the long term and the short term, the next 24 hours. Euro area retail sales, of course, coming as well, plus that jobs data, unemployment, payrolls stateside as well. Does that then change the market's view, at least on the dollar, on the Treasury market? We're going to keep an eye on that. My favorite, I'm going to keep an eye on the BBVA story. They have an AGM, a shareholder vote internally to see whether or not that kind of one BBVA share for 4.83 Sabadell shares will actually go through. It is the largest European banking transaction, not only this year, but domestically in decades. So that is my other obsession of the week. And of course, central bank speakers Lagarde and Williams as well. Guy, I don't even know where to start because I really do feel like the payroll story is potentially the game changer for these markets. I feel a little sleepy this morning.
You think the market's a little bit sleepy, you're a bit sleepy?
A little of both.
Okay, I know the feeling. Yeah. We were all watching what was happening last night here in the UK. Look, the whisper number is 186. The survey number is 190.
Yeah.
So we are expecting potentially a little bit of downside on the print. Watch the unemployment number. That's going to be absolutely critical. But these are still reasonably okay numbers. This is a slowdown that's happening at a reasonably gradual level. If we get a surprise to the downside or the upside today, the market is not the market may not have the liquidity to manage that. So you could see some quite significant volatility this afternoon, which I think is going to be interesting. I do wonder, though, whether politics is still going to be the dominant force with this market this afternoon. Do you think people are really going to be kind of paying as much attention to what's happening with the macro when we don't know yet who's going to be the next incumbent to the White House? And it feels like this is the weekend in which this weekend feels pivotal to that process.
It does, but it's also, I haven't heard anyone, Sharon Bell included when we asked her, actually map out what that trade looks like. And
I think it's really hard.
And even if it does hypothetically solidify, say, whoever, whether it's Biden staying in the race, whether it's Kamala Harris taking over the nomination, whatever that process looks like, even if that solidifies a Trump 2.0 in the minds of the market participants, what's the trade? Because we still don't know what the economic agenda looks like. It is still not the same buy oil, invest in the dollar, hop into yields. That was the trade of 8 years ago. That may not be the trade this time around.
Do you assume that it's inflationary? Do you assume that a Trump presidency is more inflationary and therefore actually what you do is sell the long end, you buy the front end? Maybe that's but that's the trade that's been put on over the last few kind of weeks. And has now been taken off.
That's the only way to map this out, not just in the States, but in France as well. We're talking about the deficit implications, and everyone's talking about it. And the only real read-through right now is selling the long end. It's that steepener trade. I'm really curious to see what happens in France and how that even shows up. Gridlock may be a good thing, but that doesn't necessarily pull back on the current
Is it a good thing, or is it just a better thing than maybe other worst-case scenarios that maybe the market are more worried about? Look, I think you've got a really interesting day coming up. It feels like, as you say, we've got a sleepy start. The UK election was largely anticipated and therefore priced. We're building up to the payroll number. We're building up to that ABC interview a little bit later on.
Yeah.
There's a lot of risk coming through, and then you add France into the mix as well.
How have you gone almost 2 hours without talking about the Euros? You know Spain and Germany are playing today? Portugal and France later as well.
It's a big weekend of sport coming up. Wimbledon continues. It's great.
Lots of sporting.
There are plenty of things to distract us, but we don't want to look at the politics.
There are. Well, still to come, we will continue to talk about what Labour's landslide victory means for Britain's financial services. Howard Davies, former NatWest chairman, and Nigel Wilson, former legal and general CEO, are coming up on the Pulse next with Francine Locke. We'll bring you those live statements from Keir Starmer and Rishi Sunak as well. But that's it for the opening trade. Pulse is up next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to a special UK election results edition of The Pulse. I'm Francine Lacqua at Bloomberg's election debrief event here at Westminster, just a stone's throw away from Downing Street, which will be home to Labour Prime Minister again for the first time in 14 years. So Labour has ended 14 years of Conservative government in the UK after storming a landslide election victory. Labour leader Keir Starmer is set to become Prime Minister, with his party winning more than 400 seats in Parliament and the biggest majority since 1997. Starmer says change is coming.
It's the guiding principle, everything we have done and must keep on doing on the economy, on national security, on protecting our borders. The British people had to look us in the eye and see that we can serve their interest. And that work doesn't stop now. It never stops. The changes we've made are permanent, irreversible, and we must keep going. We ran as a changed Labour Party, and we will govern as a changed Labour Party.
Well, the outgoing Prime Minister, Rishi Sunak, has taken responsibility for the Conservatives' poor results. Several high-profile Tories have lost their seats, including the former Prime Minister, Liz Truss.
The Labour Party has won this general election, and I have called Sir Keir Starmer to congratulate him on his victory. Today, power will change hands in a peaceful and orderly manner, with goodwill on all sides. That is something that should give us all confidence in our country's stability and future. The British people have delivered a sobering verdict tonight. There is much to learn and reflect on, and I take responsibility for the loss.
So the market reaction, well, it's been not really a market event, but let's look at pound and also some of the major indices, also gilts. Now, stocks and government bonds seem to be rising. Let's bring that up for you if we can. But the pound has been strengthening for 7 straight days. again, it's strengthening again after this Labour winning a majority, giving it a clear mandate to deliver on its pledge for greater economic stability. What you hear from certain corners of the city is that they were worried about a Liz Truss event happening. And so with Labour, they feel like they're in safer hands because of the turmoil that we've seen in the last 3 to 4 years under the Conservative government. Now, we have a range of guests this hour, including the new Labour MP, Uma Kumaran, the former NatWest chair, Howard Davies, and the former Legal and General Chief Executive, Nigel Wilson. So all of that and much more is coming up. We also have market analysis and economics analysis with Simon French. But joining us now on the morning of her party's historic win is Liz Kendall, UK Labour Party MP and Shadow Secretary of State for Work and Pensions. Liz Kendall, thank you so much for joining us. First of all, what's it like at Labour Party right now?
I think people are really proud of this historic victory that Keir has led us to. And, you know, if you'd asked me the morning after the 2019 election, when we had one of our worst defeats in history, whether we would be here, I probably would not have believed you. But I think the win that we've seen is testament to Keir's leadership, the fact that he has changed the Labour Party and wants to get it again, put it in the service of the British people. He said in his speech this morning we could have a moment of pride and celebration, but then we have to roll up our sleeves and get working. So we know there's a big job ahead, but we are clear-eyed and we are determined, and change is coming to Britain.
So what does getting to work mean for pensions? I know you've so far refused that you would, or you've ruled out actually scrapping the 25% tax-free allowance on pensions. Can you rule it out now, or is it too soon?
Well, listen, you spoke in your introduction about the need for economic stability, which was at the heart of our manifesto, as well as our plans for growth, our #1 priority for the government. And I am sure we will get to work straight away on those growth plans. Somebody's happy in the background. The great British democracy. But for pensions, we've said we'll protect the triple lock, and we do not want to see the turbulence and the chaos that has actually hit pensioners in this country hard. We now have around 1 in 5 pensioners in Britain living in poverty. And so there's a big agenda there to get that security and stability, bring the cost of living crisis down, and give pensioners the confidence that they can enjoy a decent security in retirement.
The Tories! So what does that look like in terms of your first? You're right, there is a lot of celebration behind you. What are the top 3 priorities that you'd like to put in place to see a difference with pensions?
Well, I want to make sure that pensioners know that their basic state pension is going to be protected by the triple lock, that we want to build on the success of auto-enrolment, which was a real achievement of the last Labour government that was then carried on by the coalition government. And we also want to make sure that the economy is stable, that we bring down the cost of living, because one of the things that's really hit pensioners hard are those struggles with paying the bills and the food and fuel. So there are a whole series of issues that we need to look at. But the key to all of this, and something I know that your viewers will be interested in, is our plans for growth. Our #1 priority, creating the jobs of the future that we need in clean energy, and our plans for Great British Energy. Our plan to transform skills, because that's one of the real challenges businesses raise with me. And in my own area, work and pensions, bringing down economic inactivity. We have the highest number of people out of work due to long-term sickness. That's not good for them. It's not good for businesses who are desperate to recruit, and it's not good for the taxpayer who's paying billions more on benefit bills because people are trapped out of work because of sickness. A big agenda. We can't change everything overnight, but we will roll up our sleeves and make a start.
I'm here, Liz Kendall, where we're having a debrief with a lot of city grandees, a lot of people in business, a lot of chief executives, and they probably want to know 2 things. First of all, how will Labour change the workplace? So what does it mean in terms of flexibility to fire and hire? So anything that you can give us on that would be great. But also, does Labour need a new industrial plan? And where's that on the priority list?
Sorry, I couldn't hear that second question. The first question was about the workplace, and we've said we'll have a new deal for working people, and we've set out the plans for that to improve rights at work, but that we will, of course, implement that in discussion with businesses. What was the second question? Sorry, I've got some other stuff going on in the background that makes it hard to hear what you're asking.
So the second question, I know... There's a party at Westminster behind you, Liz Kendall. The second question was on an industrial plan. Does the UK need a new industrial plan going forward?
Yes, we have committed to having a modern industrial strategy where businesses know the government's commitment, the investment that we'll put in, that we hope will leverage in the private sector investment to create the jobs of the future, particularly around clean and green energy, but also our reforms to the planning system so that we can build the infrastructure and the labs and data centres that we really need. You know, I think this has been a real problem in the country for too long, the weak or stagnant growth. That is at the heart of this doom loop that we have got into. Ever higher taxes, you know, low growth and worse public services. I know we won't be able to change everything overnight, but one of our big messages has been to businesses, we can't deliver this without you. We'll work in partnership with you and give you that stability and security you know you need to invest and to have the confidence. I mean, there's been so much turbulence in the UK with different governments, 5 different prime ministers, 7 different chancellors, and that has not been good. It hasn't given businesses the confidence to invest in this country. But under Keir Starmer's leadership with Rachel Reeves, I believe that's one of the biggest changes we'll make.
Liz Kendall, thank you so much for braving the chanting and the protests and also the partying behind you. That was the UK Labour Party MP and Shadow Secretary of State for Work and Pensions. There you go. It's never dull. Thank you so much for joining us. Now let's talk about the markets and economics with Simon French. He's Panmure Gordon's Managing Director and Head of Research, who also joins me. Now, Simon, we're in a little bit of a quieter place. So this is where the Westminster Bloomberg debrief is happening. I mean, it's not a really market event because the polls were so far ahead for Labour. But what are you looking at for the next couple of weeks that could be market moving? We need, you know, more news on pensions, on workplace, but also taxation.
We do, and I think you're right to ask those, what I would describe as microeconomic questions, because the macroeconomic picture is set out by Rachel Reeves, who will be the UK's new finance minister. She's not going to deviate hugely in terms of the fiscal policy, monetary policy pretty well set, and of course independent of the Bank of England. So it is those micro changes on pensions, but also on planning and reintroducing, if you like, the growth drivers into the UK economy. And I think my big takeaway actually from overnight was, while it was a landslide in what our American viewers would call the Electoral College, it certainly wasn't a landslide in terms of the popular vote. Only just over 1 in 3 people who voted actually voted for the Labour Party, despite the fact that they've got 420, 430 seats. So that's an extraordinary, if you like, contradiction between the Electoral College, which would suggest to them, actually, there's a huge mandate for big change, controversial change on areas like planning, albeit whether a marginal constituencies with narrow majorities, will they have the backbone to go with controversial planning changes, but also changes on business rates, on council tax, the kind of things, microeconomic changes, which we all believe as economists will have a big impact on the UK's trend growth.
So first of all, Sam, talking about the timeline, do they have 100 days to really make a difference, also to make sure that voters that didn't vote for the Labour Party are on side? And what should they start with? And we're talking skills, trade. There's also, of course, pensions, but there's loads of stuff that they could work on.
Well, for capital markets participants, I do think your first question, actually, to Liz Kendall was exactly the right one. On pensions, they promised a review of pensions. They spoke about, in their manifesto, being much more comfortable with, compared to the outgoing Conservative government, with UK pension funds over-allocating to UK assets. And for UK assets, both equities and bonds that have been under pressure, actually, certainly in the last 8 years since the Brexit vote, and certainly very acutely after 2022 in the mini-budget, the degree of stability, but also perhaps some pump priming through regulation for the UK's asset management industry, which is the second biggest in the world, to allocate more to its domestic market. I think that's the market-moving event rather than what we've seen overnight.
The concern is that this takes time. And Keir Starmer, I think, promised a 2.5% growth target. So how is he going to achieve that?
I think that's unrealistic, honestly. That's probably, I don't think we should look at the highest sustained growth rate in the G7, which is what he said in the manifesto, as particularly achievable short term, because the UK's only achieved that twice in the last 40 years by my data. It's a really difficult thing to achieve structurally. The easiest way to achieve it actually is to increase migration, and actually politically that would appear to be quite a toxic thing for any part of the political spectrum to do. So near term, I do think pensions reform will be key. I also think there's 9.4 million working age people who are inactive, not in work, not seeking work. That is a huge number of scarce resources. The quickest way to get growth back into the UK economy is to find perhaps 1 million of those people who were recently, probably pre-pandemic, engaged with the UK labour market, get them back engaged, back seeking work, back in work. That's the quickest way to raise growth.
But Simon, how difficult is it to calibrate? So they want to protect workers. How do you do that without becoming like France, where you can't fire anyone and therefore hurting growth in business?
You do it piecemeal, you do it slowly, you don't do it in one big bang. A bit like, actually, to give the outgoing government, indeed, the previous Labour government and the outgoing government their credit, they've done quite a lot on low pay over about 15 years in the UK economy, actually more than that, almost 25 years now, from introduction of the national minimum wage, which, if you remember the debate back in 1998, I certainly do, because I was working on this area, at £3.60, it was, well, will that generate unemployment? Will that make the UK's labour market less flexible? It's gone from £3.60 to today £11.40, and yet unemployment's still just 4.4%, and by international standards, the UK labour market's pretty flexible. Now, you're talking about a different set of things here regarding the abolition of zero-hours contracts, the rights of workers from day one. That's why I say, do this thing piecemeal. Change something, evaluate it, see whether it changes employee demand, labour market flexibility, and then go further if you feel that the labour market can absorb that without a correction on the employment rate.
Simon, I mean, when you look at the market event, there hasn't been one. Is that because the UK is maybe seen as, you know, a good house in a bad neighbourhood? I mean, you have France with all of the drama election, and then you have Biden on the other side with the US elections and all of the uncertainty. So the UK seems fairly stable.
Well, I certainly think that is, the international comparison is one. But also, Rachel Reeves has done what Liz Truss did not do. She has primed the market on what to expect, and this has been a multi-year process. Of course, she was in Washington last year talking about securonomics, unveiling what is not a particularly catchy term, let's not kid ourselves. I've dubbed it Bidenomics, but without the balance sheet. But to some extent, for international investors looking at the UK, and they're going, actually, we would like some of the self-harm of Brexit and the mini-budget to go away. Securonomics is exactly what business wants to hear to invest more. So actually, that plan of fewer surprises is actually what financial markets want to hear today and actually want to hear over the next 100 days.
Simon, thank you so much. Simon French there, Panmure Gordon's Managing Director and Head of Research. Now, we'll have plenty more from here throughout the day. We'll also get the view from the former NatWest Group Chairman, Howard Davies, on what business is expecting from a Labour government. That's next, and this is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities
could face bigger challenges next.
It was going to keep reading World Cup. This is a 3
as the economic picture,
covering the intersections of Hollywood, Silicon Valley, and beyond.
The former Bank of England economist Rachel Reeves is set to become the UK's first female chancellor. Now, Reeves was key to Labour's pitch to business, and she'll have to hit the ground running with the new government inheriting a number of economic challenges. Well, with me now is the former NatWest Group chairman and now Inigo chairman, Howard Davies. Thank you so much for joining us. What's the way forward for UK PLC and UK growth?
Well, I think in the short run, we could find some quite good news coming our way, because I think interest rates will fall, and the Bank of England pretty clearly signalled that. There's a lot of savings, particularly in the retail sector, which can be spent, and real incomes are rising. The rest of the world looks a bit dodgy, so the pound will probably be fairly strong, and I think this UK stock market will probably be strong. It could benefit from that, because quite cheap at the moment.
FTSE 250,
yeah,
the one that tracks the economy.
Exactly. I think in the short run, we should see investment reasonably strong and public and consumer spending reasonably strong. So there could be a bit of a sugar rush over the next 12 months or so. But of course, the underlying problems of the British economy will not be altered by that.
But so what does Labour need to do now? Where do they need to be decisive on? Is it planning? Is it actually, taxes? Do they need to give a clear message to businesses and the outside world to attract, international investment?
Yes, I think so, but I think the fact that they will have a large working majority and some stability will be in itself a benefit, and so we'll get some uptick from that. But I think being clear in the fiscal statement, which I imagine will be in the autumn, about what the future fiscal rules are would be beneficial. We now have a very peculiar fiscal framework, which says that borrowing must be falling in year 4 or 5 of the Parliament. I mean, that doesn't make a lot of sense. I think going back to something like what Gordon Brown had, which is borrowing only for investment, I think you could sell that, particularly a government that otherwise was being pretty disciplined on routine public spending. And that could give them some headroom for infrastructure investment, which would be very helpful as well. So I think that's what people are going to be looking for, is a sensible framework in the autumn. And I think she's got a window over the summer to put that together.
But Labour have also tried to pitch this growth at 2.5%.
Yeah.
How do you achieve that without risk-taking? And risk-taking, it maybe doesn't come easy when it comes to investing in startups, if you're Labour.
Yeah, I mean, nobody can quite see how you get to 2.5% when productivity has been trundling along at maybe 0.5%. And so that's going to be very, very tough. So in the short run, you might, with some consumer spending boost and some infrastructure spending and some construction, there's a lot of construction projects waiting in the wings that probably will now start. You might claw yourself up close to 2% in the first year or so, but unless you can do something fundamental on productivity and investment, I think 2.5% is going to be a very tough thing to get.
I mean, Labour also said they want a closer relationship with the EU. I don't think from the EU side there's any appetite to renegotiate anything, frankly, because they're distracted with elections and various problems they have at home. But what does that look like for financial services? Yeah, well, I'm not that optimistic on that front. And I think that saying in the later stages of the campaign, as Keir Starmer did, that we're never going to be in the single market in his lifetime, etc. I don't know why you want to tie your hands, because Europe is changing as well. You know, it takes two sides for a negotiation.
all kinds of things about freedom of movement are being thrown into question by the French election, which in European terms is much more significant than ours. And who knows what kind of immigration, migration, free movement arrangements might emerge in Europe in the next 3 or 4 years, which might be something that was more comfortable for us. So I would rule nothing out. I think in the short run, they can push on professional services qualifications. Maybe they'll get somewhere there. They will not secure equivalence for the City of London, I don't think, unless there's a new commissioner who really wants to move in that direction. But, you know, the city has managed to sort of find a way, as you know, to accommodate itself to these new arrangements. So I don't think that there's any great urgency to deal with that. The euro clearing issue remains an awkward one, but my feeling is that the Europeans are losing on that.
Is there a danger that Labour attacks banks? Because they're looking for money, and politically this could be, you know, sold to the public quite easily.
Well, Rachel Reeves was a banker as well as a central banker, and she has ruled out windfalls. I think in Labour doesn't really like windfall taxes, and they can have some adverse consequences. There's the bank levy still, etc., and I don't think the banks can expect any favours from a Labour government. But I think that they'll be more keen to use the banks to boost investment than to increase taxation on banks, which would reduce their willingness to lend. So I feel that probably banks will get more jaw pressure to invest and lend to small businesses and on infrastructure projects, etc., than they will get clobbered with additional taxation.
So what's the right way of doing it? If you attract investment, is it, you know, inward investment, or is it from, for example, you know, this UK ISA that the Tories had floated, or is it actually international investment to bring in? What's more fruitful?
Yeah, I don't think a UK ISA is going to make a great deal of difference, frankly. I mean, it might relatively boost a few UK stocks versus others, but I think that a long-term decision about the future corporation tax regime. I mean, the Tories have gone push me, pull you on corporation tax. The rate's going up, the rate's going down, the allowance is going up, the allowance is going down. I think they need to set out what their corporation tax regime will be for the next 5 years. I think that would be enormously helpful. Maybe they should say something about competition policy, which is also a concern to overseas investors, because our competition policy has seemed to be a bit out of line with what's going on in Europe. So I think just setting those dials and committing to keeping them the same for 5 years would be quite beneficial on attracting inward investment.
Sir Howard, thank you so much for joining us. That was Howard Davies, the Indigo chairman and former NatWest Group chairman. Now, coming up, we'll have plenty more here from Westminster. We'll also be joined by Bloomberg's editor-in-chief, John Micklethwaite, as we discuss Labour's landslide victory and the priorities that they'll have to put in place quite soon. We're also looking at live pictures of Downing Street. More on this next. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth life is I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is Bloomberg.
Good morning, everyone, and welcome back to a special UK election results edition of The Pulse. I'm Francine Lacqua at Bloomberg's election debrief here at Westminster, just a stone's throw away from Downing Street, which will be home, of course, to a Labour Prime Minister again for the first time in 14 years. So Labour has ended 14 years of Conservative government in the UK after storming to a landslide election victory. Labour leader Keir Starmer is set to become Prime Minister later today, with his party winning more than 400 seats. And we're just looking at the Chancellor as he was leaving Downing Street, number 11, with his family. Live pictures there.
It's the guiding principle, everything we have done and must keep on doing on the economy, on national security, on protecting our borders. The British people had to look us in the eye and see that we can serve their interests. And that work doesn't stop now. It never stops. The changes we've made are permanent, irreversible, and we must keep going. We ran as a changed Labour Party, and we will govern as a changed Labour Party.
We're looking at live pictures of Downing Street. So we were just seeing Jeremy Hunt, the Chancellor, with his family and wife leaving number 11. And of course, there's all the pageantry today of Rishi Sunak also going to see the King. So joining us to talk about all of this and some of the policies ahead is John Micklethwaite, Bloomberg's editor-in-chief. John, it's always quite exciting. So we're literally on the other side of where we see this fan pulling up. It's always quite exciting to see
you just called it
power.
You just called it pageantry. It's actually very, it's people moving out very quickly with a removal van. I remember years ago when Labour lost their majority, Peter Mandelson, who some people thought was the most powerful man in the country. The next day I met him bicycling up St. James's Street. It's a much more, compared with what happens in America and places like this, it's very immediate and you might argue extremely democratic.
You're right, but at the same time, you go and see the King.
You go and see the
Prime
King,
Minister
yeah.
sees the
You get
King,
that
so
bit,
that's a bit of
yeah.
pageantry. So what happens today?
I think two things have happened. One is that, Starmer has won. But possibly more the Tories have lost. You just look at the vote. His vote didn't go up much. Theirs collapsed. Paradoxically, despite that, Keir Starmer is now an enormously powerful figure, both in terms of Britain, but also I think Keir Starmer is now a very important figure on the global stage. You look around the world, Macron in trouble, Scholz in trouble in Germany, Joe Biden, it could be a long weekend for him. Here is a man who nobody really knew or thought about before, but who is now going to be part of the West, part of the leadership of the West for 5 years. So Keir Starmer now has much more clout, not just within Britain, but also within the world than actually you could argue a British Prime Minister has had pretty much since David Cameron, or maybe since Tony Blair.
So, John, what kind of alliances will he try and develop? Will he try and get close to the US? There's also this NATO summit that you were saying.
Yes, next week it will be that evident suddenly that he is the person with a more obvious long-term future than anyone else there. I think his main focus will be on Europe. If I was him, the single thing he needs most is growth. Britain doesn't have much money. Everything changes if the economy begins to grow. If you can refashion Britain's relationship with Europe, you open up the amount of growth by an enormous amount. And so if he can do anything on that front, it would help. And his only bad luck is that this is happening at precisely the time both France and Germany are in a massive degree of dysfunction.
But John, when you look at, so we have a brilliant story basically saying that because it's maybe more of a referendum on the Tories and it is really a love for Labour, especially if you look at the popular vote, you know, what's he going to do in the next 100 days? So does he focus on domestic policies? Is it taxation? Is it the workplace? Or is it also foreign policy?
I think it's less about what he actually does and how he does it, because I think most people, we're here surrounded by financiers and business people here, most of those people have a kind of pretty good trust that Starmer isn't going to do anything too bad. But his whole kind of emotional starting point is gradualism. You know, this is a man who came in, over the course of 4 or 5 years, changed the Labour Party unbelievably. But he didn't do it straight away at the beginning. Now he's Prime Minister, actually, when it comes to the big decisions, changing the planning laws in Britain, trying to do a new relationship with Europe, opening up other things. These are all things where you need to start early and you need to start radically. And the comparison with Tony Blair, I'm tragically old enough to remember all this. Blair, no, you were a babe at that time. The Blair came in with this radical thing straight away with the Bank of England. You would like Starmer to have something which has got an element that could make that difference.
And yet it feels a bit different. We'll come to that in just a second, John. Stay with us. Let's also turn to the Liberal Democrats, one of the big winners from this election. Joining us now is Daisy Cooper, the deputy leader of the Liberal Democrats. Thank you so much, Daisy Cooper, for joining us. We all saw the pictures of Ed Davey actually dancing euphorically to Sweet Caroline. How's the night been?
Oh, it's been a fantastic night. I mean, we're absolutely thrilled with these record-breaking results that we've had. We're incredibly humbled that so many people have put their trust and support in us. And as I say, it's a very exciting time. During the general election campaign, we said very clearly that we wanted to save our NHS, fix our social care system, take real action on the cost of living and protect our local environment. And those are precisely the priorities that we're going to campaign on in the next Parliament.
So, again, you're now jumping back at the forefront of UK politics. What are your 2-3 top priorities on how you're hoping to influence, actually, Westminster?
Well, in the last Parliament, we, as a much smaller parliamentary party, we had a huge amount of influence because we were the first party to call for a windfall tax on the big oil and gas companies, and that was copied by Labour and then by the Conservatives. We were the first party to call for the energy price hike to be scrapped. That was copied by Labour and then the Conservatives. And we were the first party to put this sewage scandal right on the middle of the political agenda in this country. And so we managed to do that in the last Parliament with just 15 MPs. Now we have around 70 MPs. You can just imagine the kind of influence that we may be able to have. And the very first thing that we have called for already is we've called on the new government to announce an emergency health and social care budget, because we know that health services are on their knees and the country is crying out for our health and social care systems to be fixed.
Do you worry about funding of that? I mean, if that's your priority, where does the money come from?
Well, during the campaign, we set out our fully funded plans to fix our NHS and tackle the social care crisis. We said that we wanted to invest an additional £9.5 billion a year, and that would be funded by closing a loophole and basically taxing the big banks and the billionaires. The Conservative government, unbelievably, in the last government, actually gave a tax cut to the big banks of £4 billion a year, and we would reverse that and spend that money on our NHS. At the same time, there's a loophole in the capital gains tax system which allows the 0.1% richest people not to pay a fair amount. And we want those 0.1% richest people in the country, those billionaires, to pay a little bit more to help struggling families and to fix our public services, which are, quite frankly, crying out for action and crying out for solutions too.
Daisy Cooper, do you think there's a necessity for some kind of windfall tax on banks?
No, so I think there's a very strong case for closing the loophole in the windfall tax on the big oil and gas companies, because they have had genuine windfall taxes that were not expected, and they've made billions of pounds because of the war in Ukraine. And therefore we've said that not only did we call for the windfall tax initially, but we're now saying that the loopholes in the windfall tax should be closed. I think with banks it's a very different situation. It's not so much a windfall, but I do think they should be taxed fairly. And what we're saying is that it's unfair that the Conservative government gave a tax cut to the big banks when ordinary folk were really struggling. That's why our fair solution is to reverse the tax cuts on the big banks, put the tax levels back to the levels they were at in 2016, and use that additional £4 billion a year to invest in saving our NHS and social care services. That is a fair form of taxation. That would be a fair way of improving our public services.
Daisy Cooper, thank you so much for joining us, the deputy leader there of the Liberal Democrats, after, I'm sure, a pretty long night. Let's bring our editor-in-chief, John Micklethwait, back. John said Liberal Democrats, they're a record-breaking night with 70 seats. I mean, the politics in the UK have completely changed. This is not just one party losing and the other one winning.
They're in a very interesting position, the Liberal Democrats. On the one hand, this is an amazing night for them, the best night they've ever had. On the other hand, the fact now they have a Labour Party that doesn't need them. The Labour Party could do whatever it likes for the next 5 years. So the Liberals are stuck in an interesting position, and the obvious way in which they would hope to put themselves forward is to say, we want to replace the Conservatives as being the opposition. Because if the Tories head to the right, that does open up some room for them. And really that is where the debate within the Conservative Party, at this precise moment, the Conservative Party does not matter much. But over the course of the next few years, it will matter, because either it swings to the right, tries to do stuff with reform, goes in that direction. I would argue that's a direction where actually it probably seals off any chance of coming back properly, or else it begins to push back into those seats that the Liberals won. There are places that you and I never dreamt of turning away from the Conservatives. Aldershot, Basingstoke, in all these places, green, leafy suburbs. They've gone to the Liberals.
And you have a number of Tory grandees, right, that have lost their seats, which frankly, when you look at, the names that have been at Westminster for 20 years, do you worry that there's not going to be a very strong functioning opposition, which any democracy needs?
Well, the Tories, I think, have proven that they are fantastically dysfunctional in government. They have to, their new job is to be less dysfunctional in opposition, and a lot depends which way they go. And from that perspective, there's one piece of good news, I would argue, from the point of view of trying to keep them together. Jeremy Hunt, who many people expected to lose, got through on a personal vote. Penny Mordaunt, quite interestingly, did a lot better, in a much more marginal seat, nearly won it, came quite close. But the real, a lot of the centre ground of the leaders came out. So you're looking more towards people like Kevin Badenoch, Suella Braverman. It's that side of it. But it doesn't, the Tories, everyone always forgets, they are the most successful political party in the West. They have repeatedly been able to regenerate. This time, it does look, I think, harder than I've ever seen it.
Sir Keir Starmer came under quite a lot of criticism for not having enough charisma, for not having enough oomph, fire in the belly. Will we see that from him as Prime Minister?
I think the answer is probably not fire in the belly in the way you say it. Keir Starmer, I've known for a long time. He is a quiet fire in the belly. He's someone, he was a passionate human rights figure. He does do this, but his style is much more of a lawyer. He waits until he's spoken to. The judge has said it's time to talk. And the other thing is this gradualist element. He changed this party gradually. He's now in a position where he's got to act quite quickly to make things happen, and that will be the really difficult bit. If he comes out, pulls some rabbits out of the hat, as they say, in the same way as Blair did with the Bank of England, then I think people, he has a real chance of consolidating things. And the biggest opportunity, it cannot be stressed too much, is Europe. If he does some kind of deal with Europe, you get the most amount of growth, more than you would do out of planning, more than any of these things. And also you stand this chance politically, which I think Tony Blair would have seized, and it's not clear whether Keir Starmer will, that if you push the Tories into a position where you have a new deal with Europe and, say, a Suella Braverman-led Tories, or God knows that Nigel Farage one says, no, we would pull out of that, I think you would then see the commercial classes of Britain really going to Labour, and that would be a seismic shift.
John, thank you so much. John Micklethwaite there, our Bloomberg editor-in-chief. Now, more business reaction to Labour's landslide election win still ahead. We'll be speaking to Nigel Wilson next. This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Welcome back. Now we're joined by Nigel Wilson, former Legal and General Group Chief Executive Officer and current Chairman also of Canary Wharf Group. I think this is a new appointment, Nigel, so congratulations on that. This is a big day in UK politics. The Tories are out, Labour's in. What do they need to do in the next 100 days?
I think they've got to get a real plan of action and start delivery on day one almost. Keir's talked about change. He's done a fantastic job of transforming the Labour Party. You and I would never have dreamed that this would happen 3 or 4 years, even 2 or 3 years ago, they'd have such a strong position here in the UK. The good news for Keir is actually the public finances are strained. The really, really good news is the personal sector and the corporate sector in the EU is capital rich. And so we have tons of money. We have £6 trillion of capital, long-term capital in the UK, which has been underdeployed, misallocated for the last 30, 40 years. So we're nearly always bottom of the G7 in terms of investment.
So where does it need to go?
It needs to go. Well, we've set up the devolution structure, which you and I have talked about before. We've got lots of ambitious mayors, lots of local people putting their hands up saying, we want to make things happen. So where do they need to spend it? An extra 20 to 30 billion pounds per year into housing. Transform the water industry by spending an extra 8 to 10 billion pounds. 50 billion pounds per year into energy. The National Grid have just done their financing on their equity, so that's going to kickstart that. And venture capital put another 25 billion. Encourage our pension funds to put the money behind the VC so we can catch up with the Americans.
That's an industrial plan.
That is an industrial plan.
That's a new industrial plan.
Yes.
Will they do something so bold? It's bold.
They have to be bold because actually we flatlined as an economy. You know, the UK is a great place to invest. London's the best city in the world to live in. Widely accepted that, but actually we've never delivered on that. We've got the best bankers in the world here. You know, at least as good as America. A massive financial services sector. He's got to use that because actually the public finances are too strained.
But Nigel, can he do that without actually raising taxes?
Yes.
On corporations?
Yes.
Without a doubt?
Yes, without a doubt, because I think all the money's there. Because then we'll start growing. The
problems of public finance are because we haven't grown, and therefore the public finances.
But you can't just magic up a 2.5% growth number.
No,
right?
but
It takes time.
100 billion a year is a realistic, extra additional capital is a realistic target, and all the numbers add up that we can comfortably do that. We have to make some minor policy changes. Jeremy Hunt was this close to making some of those changes. So I'm hoping that Rachel says, well, actually, the Treasury's done a lot of the work here. Let's make those changes happen, and let's really, really drive growth through investment here in the UK.
Is there a timeline problem that some of the investments, the water, the utilities, take, 5 years, 6 years, 10 years, and growth you need next year?
Growth you need next year. The housing one, because there's a stock of housing stuck in development, so we can use call-in powers and compulsory purchase orders here in the UK. The Secretary of State can do that, and actually has to do that. Homes England can do that on CPOs. We've devolved a lot of power now, right, to all of the big cities. These are very capable people now, some of these mayors, and they want to change as well. Keir's saying, let's change. He's changed the Labour Party. We have to change the economy.
So what should they start with? Planning? I mean, if they change planning and actually build houses and make sure that they do the call-ins, it'd be a pretty big message to everyone that they do business.
I'd be looking right away at 50 or 60 of the different planning problems or planning situations, or housing projects or energy projects that are just stuck in planning, and actually use the powers they've already got to just drive those through as quickly as possible.
In the next 2-3 I mean, again, you can't...
In the 100 days. In the 100 days.
Is the honeymoon like 100 days, or is it even shorter?
Well, there's a mini honeymoon.
There's a mini honeymoon, and then there's like
there's a longer one, but the longer one isn't that long either. It's only 100 days. And so, they've got to do the OBR review. That takes 10 weeks. They've got the spending review to do and the budget review. They've got to get through all of them by the end of November, and then have a true momentum going into next year. Our personal sector is better than the US in terms of lots of excess savings. The Americans have spent all theirs. We've got lots of savings here. All the political chaos elsewhere, we're going to have 5 years of political certainty. That's going to be very attractive to investors if we tell people we're going to do things.
Nigel, thank you so much. We tell people we're going to do things. Nigel Wilson, former Legal and General Group Chief Executive Officer and now Chairman of Canary Wharf Group. Now, our special coverage of Labour's landslide election will continue shortly. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back, everyone, to our special coverage of the UK election result. With us now, Bloomberg's head of media editorial, Dave Merritt, also my co-host on the podcast. Dave, we haven't really talked about Nigel Farage. He's an MP, and for the moment he has 4 seats. It was projected he'd get 13, but could actually change things in Parliament.
Well, regardless of the amount of seats he's won, when you look into the results of all the seats that the Conservatives lost, that's where the real impact of reform has been. You know, we're talking about the Labour landslide this morning. Someone just used the phrase sandslide to me. Is this a landslide built on sand? Because it's the lowest portion of votes that actually went into that Labour majority. And when you lift up the hood, you see that if reforms votes were taken out of the equation, the Conservatives really wouldn't have lost nearly as many seats as they did. So underneath the surface, there's the reform effect, which has had a huge impact on the outcome of this election. Now, Nigel Farage at some point in the campaign was talking about being the opposition or replacing the Tories. He's nowhere near that. He's got 4 seats at the current counting. He is in Parliament, though, for the first time. On how many times has he tried?
8.
8 times, or 8th time lucky. He will be in Parliament, and you know he's going to be a very vocal member of Parliament, and a thorn in the side continue to be for the Conservative Party.
Dave, so does it drive policies? I mean, I imagine there's chaos, right, in the Tory party. I guess it's better than it could have been, but it's still really a very, very bad turnout for them. So, you know, does it shift everything more to the right?
Well, that is a really fascinating question. We're going to have to find out in the coming days, out of the wreckage, the amount of MPs that are left, 120 or so that they've got. Look at who's lost their seats, though. Some of the contenders, some of the people from the right of the party. Former Prime Minister Liz Truss herself lost her seat last night. So who's left to be the leadership contenders? We know the favourite, the bookie's favourite, Kemi Badenoch. She retained her seat. She'll be a contender. The Chancellor of the Exchequer, who's the Chancellor for the next hour or so, he kept his seat. It was pretty close. And we know he's taken a run at the leadership in the past. But we're going to have to see all of those groupings of MPs. Where does the parliamentary party sit? Is it more centrist? You know, let's take a step back and see, how did the Labour Party win this election? They moved from the extremes to the centre. It's a cliche that's often said, British elections are one of the centre. The Conservatives may want to tack back to that if they've got a hope of regaining some of this lost ground.
Dave, thanks so much. Dave Merritt there, our Bloomberg head of media editorial. Well, that's it for the pulse. We'll have plenty more throughout the day. A Bloomberg Brief with Kriti Gupta. This is Bloomberg.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977, when by then I had a little research station, and 4 of my students were kidnapped, and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning from our global headquarters in London. I'm Kriti Gupta in for Manus Craney and Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda. A Labour victory. Keir Starmer won a landslide victory in the UK general election, dramatically reshaping the political landscape. Meanwhile, stateside, it's make or break for Biden. The president heads into the most consequential weekend of his political career as pressure mounts for him to drop out of the race. Plus, it's Jobs Day in America, and today's report might just flash a warning signal for the Fed. We'll have full coverage right here on Bloomberg TV. But first, let's get to our top story here. A new Labour government is sweeping into office in the UK after winning the general election in a landslide. It ends 14 years of Conservative government rule with outgoing Prime Minister Rishi Sunak taking responsibility for his party's disastrous result. I want to bring in Bloomberg's Alex Morgan to break it all down. Alex, over to you.
Well, hello, Chrissy. Now, we've got quite a large screen here, and I've got quite large arms, but still, I'm sort of struggling really to point to the scale of this Labour win. This is a stonking great majority. This is the second largest majority we've seen since Tony Blair in 1997 for the Labour Party. I mean, really extraordinary. 412 seats. And we've seen a collapse of the governing Conservatives, the formerly governing Conservatives, dropping to 120 seats. Now, Rishi Sunak, of course, was the last Prime Minister. There have been 5 since the Conservatives took office in 2010. They've been the governing party for 14 years. Their vote collapsed. The Liberal Democrats, look at that. They are now the third force once again, another centre-left party in the UK, picking up their best ever result. North of the border in Scotland, the Scottish National Party dropping down to less than 10 seats at 9. Let's put it on a map for you and now show you the sea of red from Scotland to the southeast of England. It's a stonking great Labour win. But, Chrissy, this is key. There have been some results which point to just how dissatisfied the electorate are. A sense that this majority for Labour, if anything, is built on a sense of frustration. Frustration with the Conservatives, frustration with the status quo. The emergence of Nigel Farage's Reform Party, Farage, of course, being to the right of the Conservatives, architect of Brexit. They picked up 4 MPs and a lot of the vote share. The emergence of that party really, many seeing as a sense that voters are expressing frustration on issues like immigration, and that'll be a concern not just for the Conservatives, but for Labour. Nigel Farage making it clear that despite just getting 4 seats this time around, he has his eyes on Keir Starmer and the Labour Party. Don't think that's going to bother Keir Starmer too much today when he's sitting on such a majority. Tony Blair, of course, in 1997 picking up a majority of 179. This is just below that, and it is below what the initial polls had been suggesting, a supermajority, but still, Labour have swept the board and the Conservatives have collapsed.
A stonking Labour victory, in the words of Alex Morgan. We thank you so much for bringing us that this morning. Let's get back to Bloomberg's Tom McKenzie, who, of course, is at Downing Street. Tom, you've been covering this all morning. What is the sense at Downing Street right now?
Chrissy, yes, we are waiting now for the outgoing Prime Minister Rishi Sunak to make a speech. 10:30 a.m. UK time on the doorstep, of course, of 10 Downing Street, just behind me. Then Keir Starmer, the incoming Prime Minister, expected to speak at around 12 p.m. as well. Alex Morgan set it up really well in terms of the key takeaways from this election. The gains, of course, that have come through for this Labour Party and the historical reference to 1997 and the upside that saw Tony Blair take office. You haven't eclipsed that number. He took in 418 seats. You're looking at about 411 for Keir Starmer. But given the context of that 2019 vote, where the Labour Party saw its biggest losses since the 1930s, it is a marked turnaround under the stewardship of Keir Starmer, soon, of course, to be our new UK Prime Minister. But then the context in terms of how these gains are and this coalition is, and what that means as this government and the Chancellor, the incoming Chancellor, Rachel Reeves, pursues those economic ambitions, given the fiscal constraints that we know that this UK economy faces.
Tom, there's so much going on in terms of what's on the agenda for the Labour Party right now, what they're inheriting here. You have the relationship with Europe, you have house planning, you have tax policy, not to mention deregulation. What comes first out of this government?
Yeah, so the first 100 days, Critty, as you point to, are going to be really, really crucial. And what we're hearing is that planning is going to be up front and centre. 1.5 million homes is what they want to build over this parliamentary session, so about 4 to 5 years. But they're looking to rewire the planning rules of the UK in pretty rapid succession. So we'll see the impact on that. And that's why, in terms of the equity markets, we're looking at the house builders. Then there's Great British Energy. That's going to take more time to capitalise, but there's a potential challenge there for some of the utility companies in the UK. On the labour force as well, we have 2.8 million people who are economically inactive. We know that the Labour Party, this new government, want to get those people, at least some of them, back into the workforce. Productivity remains a challenge. The debt to GDP currently close to 100%, and then the deficit as well, above 3%. So the constraints are there. They will come through with some modest spending, not as much as many on the left would like, but you should expect to see moves around planning, around Great British Energy, and around the industrial policy in the first 100 days. Then we look ahead to the autumn statement, potentially in September, maybe more likely in October, for the incoming Chancellor, Rachel Reeves.
Are the markets ready for it? More importantly, is the economy ready for it? Bloomberg's Tom McKenzie at Downing Street giving us that update on the potential policy changes to look forward to ahead of this, or actually after this landslide victory. We thank you so much. Let's get over just a stone's throw away from Downing Street over to our UK election debrief event happening in Westminster. Bloomberg's Francine Lacqua on location there. Fran, walk us through what the sentiment is like. What is the vibe like? What are you watching this morning?
Well, the vibe is pretty good here, and good morning, Critty. I think a lot of people are trying to shelter from the rain. We are about 100 meters from Downing Street, and a lot of people have popped in. We have a lot of newsmakers, a lot of business people trying to understand what comes next for Labour. Well, one person who's right at the heart of this, who helps us understand, is Dave Merritt. He's our Bloomberg head of media editorial. Dave, we were inside. There's about 200 people trying to figure out exactly what the priorities for Labour are. What do they need to get done in the next 100 days to make sure that the business community, but also, chief executives know they mean business?
Yeah, that's right. Everyone's dosing up on coffee here after only a few hours sleep. And, this is where it gets real, isn't it? There wasn't much detail in Labour's manifesto, a sort of deliberate strategy to be perhaps a little vague so that it couldn't be unpicked on the sort of tax and spend questions. But we're going to have to find out when the first budget of Rachel Reeves, the incoming Chancellor of the Exchequer, we're assuming she's going to be appointed that this afternoon. What is the detail in there? What are the big gestures? We all know that the fiscal situation in Britain is very, very tight. This is not like it was in 1997, the last time we had a big Labour landslide win. Then Tony Blair and Gordon Brown had some wiggle room in the economy. They could actually spend a lot of money and invest in public services and things like education and NHS. That is not the case without some big revenue-raising measures. There are very few of those in the Labour manifesto. So that is what everyone is asking. Where are taxes going to have to go up? Is it going to be on the corporate sector? Is it going to be on personal taxation in order to give the government some firepower to actually invest in the public services, which is what they've committed to do?
So will we see a Labour Party that's quite bold? I know Keir Starmer, because of his personality, is maybe seen as careful and subdued, which is probably what markets wanted, which is why we're not seeing a lot of market reaction after some of the pretty wild years under the Tories.
Yeah, I mean, bold isn't an adjective that's normally associated with Sir Keir Starmer. And yet, who could be more emboldened by the result he's waking up to this morning? The biggest landslide in anyone's memory, the most crushing defeat for the Conservative Party in its very long history. So if that doesn't embolden him to take sort of big actions, he's got a whopping majority, and you can sit here and say, well, he can do whatever he likes. It's not really in his personality that we've understood so far to be come out the gate. He tends to look at things very carefully, come to a decision. But you know, he has in just the last 4 or 5 years since he took over, he has taken Labour from their worst defeat to one of their biggest victories. So a slow and steady approach has certainly won him the race in this case. But, you know, now everyone wants action. We want to have a budget. We want to see where the big measures are going to come from. The markets, as you said, have taken it very much in their stride. Of course, it was pretty priced in the result. So not much reaction there. But, you know, where all the assembled business people and people from the City of London here want to know, what is it going to mean for their companies?
Yeah, and also, I mean, so Keir Starmer said, look, he's going to grow this economy by 2.5%. I know he has quite a lot of levers. It could be through trade. It could be through industrial planning. But actually, again, the timeline of how you achieve those compared to the 2.5% target, you know, seems hard.
Yeah, you know, Liz Truss went for a big growth agenda. We know what happened there by doing something dramatic with tax. The markets had a convulsion. So what are his options? Now, one thing that's come up this morning in discussions is Europe. You know, he's been a little tight-lipped on this because it's such a sensitive and toxic issue in British politics, and was blamed for their big defeat back in 2019, the question about Brexit. But, you know, there is an easy win here about resetting the relationship, arguably, with the European Union.
If the EU want to negotiate, because this is what makes me laugh. You go to Brussels and you speak to insiders, and they're like, you know, the idea that Labour kind of come in and renegotiate is maybe far-fetched because the EU has moved on and have a couple of problems of their own.
Well, maybe the fact that they have some problems of their own and some of the leadership in France, in Germany, and economically as well, some questions there. You know, people felt economically, or the feedback from the European side was that Brexit was a lose-lose for both sides in terms of, you know, putting up trade barriers. So is there an incentive now that the Conservatives, who are blamed for Brexit across the European Union, have been crushed in this election, that Labour, and of course, remember, back in the, cast our minds back to the Brexit debate, Keir Starmer was arguing for Britain to stay initially in the single market. Now, could that question rise up again? You know, there would be an instant boost to companies' trading activity if that were the case. Now, I'm not suggesting he's about to come out and say that this morning, but a different approach. We've seen a thawing of ties with Europe under Rishi Sunak, of course, a thawing of tensions. But that process, you know, Europe cracked open the door a little bit. But if I was Keir Starmer, you'd be looking at that question this morning as something which you can chalk up a very quick win by resetting completely the attitude to Brussels.
Dave, I mean, what else? The first time that we see Keir Starmer on a global stage is actually the NATO summit in D.C. next week. We haven't really heard him talk that much about foreign policy.
We have not, and it's going to be a huge moment for him next week, setting onto the world stage. We've been listening to John Micklethwaite, the editor-in-chief, this morning, talking about the global context of this win. And you look around the world and you see the shaky foundations of many of the leaders of the NATO alliance. They're going to be sitting around that table, whereas Keir Starmer is going to walk in with this amazing longevity. He's going to be able to say, look, I have the biggest mandate for a British Prime Minister in living memory. I'm going to be around this table for a very long time. You probably can't say the same for the other people around there. Joe Biden, we know that it's a pretty perilous position he is in. We will know more about President Macron after the results on Sunday, but again, huge issues he is facing, and Olaf Scholz in Germany similarly. So suddenly he's catapulted to being one of the more stable leaders on the global stage. That's not something that that's not a position Britain's prime ministers have had over the last few years.
Dave, what happens to the Conservative Party? So because of Nigel Farage and Reform actually doing much better than expected, does that bring maybe the Conservative Party to the right, or does it make more sense staying centrist?
Well, yeah, Nigel Farage has won a seat at the 8th attempt, but they don't have the sort of cluster of MPs in Parliament. They're going to have a few, and I'm sure there'll be an irritation. And their vote share is responsible for countless Tory MPs losing their seats. However, you know, British politics, we've said it many times, is won from the centre. Elections are won at the centre, and I think you see some of the more right-wing members of the Conservative Party have lost their seats overnight. So, of course, the first thing is going to have to be, assuming Rishi Sunak steps down as leader, a leadership contest, and what groupings are left within this much, much smaller group of Conservative MPs that can coalesce around a leader. Remember, it's also down to the Conservative membership who leads the party in the end. So there's a huge amount of unknowns in that. I think everyone's going to have to look at the makeup of the remains of the Conservative Party in Parliament to see what sort of Tory leadership or opposition is going. But you know, remember in the campaign, Nigel Farage was talking about him replacing the Conservatives at the opposition. We're nowhere near that happening. You know, they've got 4 maybe MPs are going to be in Parliament. So, you know, the Conservatives will dust themselves off. They're a 300-year-old political machine. And from the wreckage of last night, something will emerge over the coming days and weeks.
We don't know with how much infighting in between, but Dave, thank you so much. Dave Merritt, there, of course, our Bloomberg head of media editorial. With that, Critty, I'm going to send it back to you in the studio, and we'll have plenty more throughout the day from Westminster.
Francine Lockwood there, as she said, with David Merritt, walking through some of the implications and nuances in the UK political space. Coming up, we're going to see how all that applies to the markets. Valentine Marinov of Credit Agricole joins me, talking about the moves in cable. Does it sustain? We're going to get to that next. This is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Brief. I'm Kriti Gupta in London, filling in for Manus Cranny and Danny Berger. Now, the pound is strengthening, adding to its longest winning streak in 4 years as the Labour Party sweeps to power in the UK general election. Now, look, this is a landslide victory for Labour. This is a historic moment after 14 years of Conservative rule. How are the markets taking it? Valentine Marinov joins me, the head of G10 FX Research and Strategy over at Credit Agricole. A pleasure to have you on the program.
Good morning.
Good morning. Let's start with this cable strength. Look, it's been a fairly complacent morning when it comes to the move in the pound as well. But we've been seeing this over and over again for the past couple of days where uncertainty and volatility around the world on both sides of the Atlantic is resulting into moves into the pound, calling it a safe haven, a sign of stability, which is strange. I'm old enough to think cable used to be compared to an emerging market currency. What happened?
Yeah, it may be tempting. I see where you're going with that. It is the case that, especially with euro sterling, as in the pound versus the euro, I mean, the pound is likely to continue to have that relative appeal of the safer, really heaven there. It is the case that following the Labour victory we just had overnight, the political outlook in the UK would be for much more political stability, which is the polar opposite of what could be the outcome or the consequence of the French election over the weekend. So from that point of view, I think euro sterling could remain under pressure. As a matter of fact, we are now gradually approaching the trend, or indeed the range that we've been trading before the EU referendum in essentially 2016. So ultimately, that divergence in the view of the euro now seen as the riskier one than the pound ultimately could push us lower. Still, that is part of our central case as well for euro sterling. We expect to move towards 84 and ultimately 83 in the coming months. And a big part of that would be in the UK, the period of political stability that we expect will come after last night's election.
Part of that political stability and part of the moves coming from Keir Starmer and Labour is to have those friendlier relations with Europe. I mean, they're going to be doing that very, very carefully. Is that something that pair cares about? Does the currency pair cares about?
Well, ultimately, it's about the economic impact of those, and to the extent that ultimately those help boost domestic investment, which has been hampered severely in the aftermath of Brexit, yes, that would be a sterling positive, in part because it will also make the Bank of England, which we expect to start easing before too long, but it could help the Bank of England emerge as less dovish than its regional counterparts, in particular the ECB. So all of that, again, adding to the view or corroborating our view that the pound could emerge as the best performing European currency in our forecast grid. And in the case of euro sterling, I've already mentioned some levels, but we also think that the pound could do well against other currencies like the Swiss franc and indeed really other regional counterparts there.
Let's talk about the deficits. Pick your deficit. In the UK, in France, in the States, you're seeing this kind of panic show up on the long end, specifically when it comes to what some of the geopolitics and what that turmoil means for the deficit, whether it's in France, whether it's in the States. But it's not showing up as much in the FX space, despite it showing up in the bond market. Why that disconnect?
Well, it is the case that at the moment, at least, I mean, what you're referring to is a development which has a couple of important consequences. The more immediate one is growth. A big part of the resilience that we've been seeing in the US, but also in Europe, despite the persistent tightening of monetary conditions, was the fact that at the same time, governments are able to really continue to spend. What we are not seeing yet, and what you're referring to, are the negative credit effects from that. And this is where the big difference between the US and the rest of Europe could come. The fact being that populism, right, because let's face it, Rassemblement National and Trump's policies, they're quite similar when it comes to more fiscal spending. Those policies may have a completely different impact depending on the currency we are talking about. In the case of the euro, we saw what the impact has been, a euro selling. In the case of the pound, we saw in 2022 what the impact of the mini budget has been, right? In the case of the dollar, however, being the world's reserve currency, I think that is shielding the currency and will continue to do so from the negative credit impact and continue to encourage investors to focus on the positive growth and, I would argue, inflation impact. So from that point of view, I guess, if populism were to ever make popular trades, that would be long dollar. This is why, going back to your point about cable, if you wish, I'm kind of struggling to buy cable here, especially given the outlook for the next 3 to 6 months, with potentially Trump winning the election, with potentially the US economy, because of that, emerging as a somewhat stronger performer compared to the UK or indeed the European economies as a whole. So from that point of view, I mean, from here, we have neutral to slightly bearish outlook on cable, but we do believe that the pound could do rather well against its European peers, the euro most notably. Yeah.
127.82 on cable, right on the cusp of 128. Valentin Marinov of Credit Agricole, we thank you so much. More ahead, this is Bloomberg.
times in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
Especially I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
Time now for front page news. A look at what's making headlines around the world. First up, right here in the UK, the FT writing that, quote, Starmer hails a historic Labour victory as Conservatives sink to their worst ever results. The front pages across Britain are seeing red after the first change in government in 14 years overnight. Next up, the Wall Street Journal focusing on the crucial few days ahead for Joe Biden as worries mount among the Democrats. His interview later today seems increasingly crucial to those efforts. And over in France, Le Monde's front page says that France's economy is suspended ahead of the legislative vote this weekend. The French national paper highlighting the prospect of political instability, generating an apprehension among economic actors in the country. Coming up, we've got Paul Donovan, global chief economist over at UBS. Stick with us. This is Bloomberg.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities.
So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
This is Bloomberg.
Welcome back to Bloomberg Brief. I'm Kriti Gupta, in for Danny Berger and Manus Cranny. Let us set your agenda. It's a Labour victory. Keir Starmer won a landslide victory in the UK general election, dramatically reshaping the political landscape. Meanwhile, stateside, it's make or break for Biden. The president heads into the most consequential weekend of his political career as pressure mounts for him to drop out of the race. And it's Jobs Day in America. Today's report might just flash a warning signal for the Federal Reserve. We'll have full coverage for you right here on Bloomberg Television. In the meantime, a quick check on these markets. You are seeing European indexes higher, FTSE 100 higher by 0.3%, but all eyes now on what's going on in France and the United States, not to mention the payroll story as well. That puts a lot of emphasis on euro-dollar, which is seeing strength this morning. A 108 handle on the currency pair. And, of course, futures taking its cue from what it's seeing in Europe, although slightly higher. Let's call that flat for now, 55.92 on those contracts. Let's return to Bloomberg's UK election debrief event in Westminster. Bloomberg's Francine Lacqua on location with the business reaction to Labour's landslide win. Fran, what are you hearing?
Thank you so much, Kriti. Now, there are many questions on, of course, what Labour intends to do. This is what we know so far. Again, the counting is continuing, but almost all constituencies have been declared. Labour has notched up seats to 412, ahead of the 410 projected in the exit polls. The Conservatives have won 121, fewer than the 131 indicated. Now, many questions, of course, for businesses and policymakers. First, what do they do on the workplace? Again, there was a general agenda in the manifesto from Labour to reform, to try and make the workplace fairer. What does that mean? What does it mean for companies? Is it extra burden? A couple of other things that I think for the moment, because we have not seen much market reaction, maybe has been missed, is that with the Liberal Democrats, actually 71 MPs, their highest seats in Parliament since the party was founded, are now a pretty potent force and back as a third party of British politics. Now, we spoke to the deputy leader, and there are a couple of things, and she was laying it out very methodically about what some of the changes that they want to see. They'll, for example, pressurize Labour in Parliament on issues like the two-child benefit cap, as will the seats, or as will the Greens, who have 4 seats. Then you have a number of upsets, for example, Jeremy Corbyn and a cluster of new independent MPs that have been elected on the single issue of Gaza. So when you're Labour, you need to now really go into the details of the growth plan you want to put in place. And then, of course, on the other side, you'll have to deal with the new political forces. And then it'll depend on what happens to the Tories. I know there's a lot of relief that maybe they didn't do as badly because they're still in opposition, but also it was pretty bad in terms of the outcome. And so it'll be interesting to see how Rishi Sunak, who I believe Kriti is about to make a statement, because we have that famous podium in front of probably the most famous door in the world that came out a couple of minutes ago, how he, what he says and how he positions it. I thought it was very telling yesterday that he says, it's a good thing for democracy that there's a peaceful transition of power, which should be given in our democracies, but given some of the questions over the U.S., maybe isn't.
It's a really interesting one, and as Francine pointed out, we are, of course, showing you live images, awaiting those comments from Rishi Sunak. Fran, I want to come back to you, though, because in just about 48, 72 hours' time, we'll have results across the channel as well out of France. You'll be on location there. How do you think Europe is viewing this Labour victory right now?
I think, look, if you look at a lot of the commentary and also market reaction to what happened in the UK was well telegraphed. It was, a transition after 14 years for the Conservative, and it certainly would not be seen as an upset. You can't say the same with all of the election drama in France, and you can't say the same with all of the election drama in the US, given it's going to be a big political weekend, of course, for Joe Biden. Now, over in France, against markets, maybe a little bit less anxious than they were a couple of days ago, because it now looks like Marine Le Pen's, national rally will not have a majority, if you believe the polls. And if she did have a majority, there were questions on some of the things that she would put in place, such as a retirement age, some of the questions that would mean fiscal trouble ahead. Remember, if you're a market participant, what you don't want to see a repeat of is that disastrous Liz Truss budget that wasn't funded, that wasn't telegraphed to the markets, because we saw the pound collapse. And so markets were very nervous going into the French election, worrying that actually Le Pen's party would do something similar. For example, tax cuts or retirement age, lowering that without being fully funded.
It's interesting that you mentioned that, specifically because one of the things that the Labor Party has to do, and I think this is relevant for an international audience, some of the United States, or Americans are saying the States are starting to wake up to this news, Fran, is the potential for some sort of more friendly policies towards Europe. You talked about that market reaction, things like a customs union, under 30s, financial services, how that employment picture actually looks. Can you just, for the international audience, put into perspective the appetite or lack thereof within the UK to reverse some of the damage of Brexit when it comes to that European dynamic?
So, Kriti, I'm not so sure, if I'm honest. I'm a little bit on the fence of this one, because we have Keir Starmer from the Labour Party that has said he wants closer ties with Europe. And there is, I think, a belief in certain parts of British politics that he can achieve that by cozying up to Europe. From the European side, and I also understand that this is how he's briefed some of the senior bankers in London, and saying, look, we're going to make your life easier, because if we get closer on capital markets union, if we get closer from some financial services, then we'll maybe make up for some of the things that we've lost since Brexit. But from the EU side, they've kind of moved on. I mean, it's been a couple of years, so the idea that they fully renegotiate something will take time. We did have Sir Howard Davies, the former chair of NatWest, and saying, because there's much more of an influence in France and possibly in Germany from the far right, where immigration is also taking center stage, then over the years you could see more of an alignment between the UK and countries such as France and Germany. But again, I think that would take time. The other question, Kriti, which is extremely important, is what happens to the Conservatives this morning. So they will probably cast around to see who the survivors are. They'll probably look for a new leader. We know Kemi Badenoch, Suella Braverman, James Cleverly are still in the mix, having held on to their seats. But this is why I think, the speech of Rishi Sunak that we're expecting any moment will be extremely telling in actually, the way forward. Then we have a little bit of pomp and ceremony. We, always enjoy looking at the pictures of the Prime Minister's car going to see the King at Buckingham Palace to then formally hand in his resignation. And when Sunak has left, Starmer will then arrive at the palace for an audience with the King as well.
All right, Bloomberg's Francine Lacqua standing by at Westminster, of course, as we wait for those comments from Rishi Sunak. All eyes on that door in Downing Street. We thank you so much. As we're awaiting those comments, let's turn for a moment to U.S. politics, because as the big event, at least for stateside, outside of payrolls, I have to say, President Biden taking in the fireworks last night at the White House as questions still surround his campaign. He is set for a high-stakes interview tonight with ABC News as he looks to silence some of his critics. Bloomberg's Rosalind Mattson watching it, I'm sure, with a bag of popcorn on this side of the Atlantic. Roz, a pleasure to have you on the program. Walk us through what's at stake here.
Well, everything's at stake for Joe Biden. Not even is he going to be a candidate, remain the candidate for the Democrats into this election. Is he going to remain U.S. president through the end of the year? And that narrative is really building, and those questions about it. And that interview, as you say, tonight, what can he present in that interview that's going to reset that conversation? He did a radio interview yesterday on the 4th of July in the U.S. where he had another flub. He seemingly confused himself and his vice president. So that was not necessarily a good sign. line. And what we're hearing, from allies across the pond, particularly in Europe, ahead of a NATO summit next week that Biden is supposed to be hosting, is a real sense of anxiety about how he's going to go hosting that meeting. And what they've been saying privately for some time, they're now increasingly saying out loud to us their real concerns about whether he's going to be, durable as a president for a second term, as a key ally for NATO, for the US, for Europe rather, and others.
And I think it's really fascinating as well, because we're talking about these institutions that are based, here. We're trying to Trump-proof to some extent, and what those odds look like. I think we're talking about a 7-8% gap in the polls right now. I think the question a lot of our audience wants to know is, does Kamala Harris, if she does indeed get swapped out with President Biden, have what it takes to beat Trump in the general election? Is that a fair swap?
Well, that's the big question. But she does have both a national presence and an international presence, more so arguably than some of the other contenders who might still be named if it does become a competition to replace Joe Biden as the Democrat candidate. So she has that standing on the international stage. She has that recognition within the US as well. Is she potentially going to be challenged on things like economic policy? I mean, she's had to not really front up on some of that, particularly face-to-face with Donald Trump. As yet, we can see he's been very sort of dismissive of her in his conversation, but we know at least he's turning his attention to her because he's starting to talk about her more often in a really kind of derisory way, being Donald Trump. But she's clearly coming onto his radar. He may see her potentially as a more significant challenge than Joe Biden.
It's really interesting because even though in 2020 she didn't poll as well, she is actually polling better despite not being on the ballot over Joe Biden. Now, the question is, how much does she know about his condition? Because she's been very vocal about supporting the president. Bloomberg's Rosalind Matson, we have to leave it there, but thank you so much. She, of course, will be, like myself, watching everything from this side of the Atlantic. Let's talk about what this all means for global economics and for markets. Paul Donovan, global chief economist over at UBS, joins the program this morning. Paul, you are picking a great and a very interesting day to join the program, so thank you for making the time. Let's start with the geopolitics of all of it. We've got the UK, we've got France, we've got the United States. We've got deficit concerns, we've got geopolitical concerns. Take your pick. What keeps you up at night?
Well, lots of things keep me up at night. I mean, I think one of the things that we are seeing, certainly in continental politics, I think also in US politics, is the rise of prejudice politics, where you're getting very hostile campaigns against groups in society, against immigration, against foreigners, and so on and so forth. And that comes out of a lot of the economic change. It's a natural consequence of a lot of the economic change that we have. But it's also extraordinarily damaging. Prejudice is a really negative force for medium-term economic growth. And so keeping it at bay is going to be quite important. Now, in the UK, I think there has been more success in keeping prejudice at bay, and that is potentially a more positive signal for future products.
Paul, we're going to have to leave it there briefly. We have Rishi Sunak making comments. We go to him live.
The King to offer my resignation as Prime Minister. To the country, I would like to say first and foremost, I am sorry. I have given this job my all, but you have sent a clear signal that the government of the United Kingdom must change, and yours is the only judgment that matters. I have heard your anger, your disappointment, and I take responsibility for this loss. To all the Conservative candidates and campaigners who worked tirelessly but without success, I am sorry that we could not deliver what your efforts deserved. It pains me to think how many good colleagues who contributed so much to their communities and our country will now no longer sit in the House of Commons. I thank them for their hard work and their service. Following this result, I will step down as party leader, not immediately, but once the formal arrangements for selecting my successor are in place. It is important that after 14 years in government, the Conservative Party rebuilds, but also that it takes up its crucial role in opposition professionally and effectively. When I first stood here as your Prime Minister, I told you the most important task I had was to return stability to our economy. Inflation is back to target, mortgage rates are falling, and growth has returned. We have enhanced our standing in the world, rebuilding relations with allies, leading global efforts to support Ukraine, and becoming the home of a new generation of transformative technologies. And our United Kingdom is stronger too, with the Windsor Framework, devolution restored in Northern Ireland, and our union strengthened. I'm proud of those achievements. I believe this country is safer, stronger, and more secure than it was 20 months ago. And it is more prosperous, fairer, and resilient than it was in 2010. Whilst he has been my political opponent, Sir Keir Starmer will shortly become our Prime Minister. In this job, his successes will be all our successors, and I wish him and his family well. Whatever our disagreements in this campaign, he is a decent, public-spirited man who I respect. He and his family deserve the very best of our understanding as they make the huge transition to their new lives behind this door, and as he grapples with this most demanding of jobs in an increasingly unstable world. I'd like to thank my colleagues, my cabinet, the civil service, especially here in Downing Street, the team at Chequers, my staff, CCHQ, but most of all, I'd like to express my gratitude to my wife Akshata and our beautiful daughters. I can never thank them enough for the sacrifices they have made so that I might serve our country. One of the most remarkable things about Britain is just how unremarkable it is that 2 generations after my grandparents came here with little, I could become Prime Minister, and that I could watch my 2 young daughters light Diwali candles on the steps in Downing Street. We must hold true to that idea of who we are, that vision of kindness, decency, and tolerance that has always been the British way. This is a difficult day, at the end of a number of difficult days. But I leave this job honoured to have been your Prime Minister. This is the best country in the world, and it is thanks entirely to you, the British people, the true source of all our achievements, our strengths, and our greatness. Thank you.
All right, Rishi Sunak there on the steps of Downing Street, announcing not only that he's going to be stepping down as Prime Minister with that landslide victory from Labour, but also announcing that he will be quitting as the party leader. Again, this is as he departs 10 Downing Street. Those live images right in front of you. Let's bring in Paul Donovan of UBS back into the conversation. Paul, some very strong words coming from, of course, the former Prime Minister of the UK. I believe we're also due to hear from Keir Starmer pretty soon. Walk us through some of the implications that this means for, say, transatlantic geopolitics between the UK and perhaps with the United States, but also with Europe.
Well, I think with Europe, and Francine was touching on this earlier on, I mean, I think that the fact that there is no longer going to be a Conservative government in the UK, the party that took the UK out of Europe, that probably does change the tone. And some of the minor inconveniences that have sort of been in place between, Europe and the UK, these may well now be sort of smoothed over with a slightly better sense of rapprochement between the two sides. Now, I am not suggesting that, that we're suddenly going to be best friends or that the UK's joining the EU again or anything like that. Nothing like that. I mean, remember, the Labour Party has got people just as hostile to Europe as the Conservative Party has. But I think that there will probably be a change in terms of the mood. For the transatlantic relationship, at the moment, I don't think it means a great deal of shift. I think that you will see an ongoing relationship there, frankly, with a lot of foreign policy issues, particularly around Ukraine. The incoming government has very much the same views as the outgoing government. That's not going to be, I think, a particular issue. One thing I think that was interesting in the UK result, and which has some global resonance, is that it does appear that at least in certain seats, the Israel-Hamas war did have an implication. It did lead to people switching votes. Now, foreign politics doesn't normally influence elections, but maybe in a world of social media, foreign politics becomes a little bit more local. We feel a little bit more intimately involved with it. And that may be something we have to think about with other elections, including, of course, that of the United States.
All right, Paul Donovan, Global Chief Economist at UBS. We have to leave it there on this historic day in the UK. We thank you so much for your perspective on the fallout of what this new government may actually mean. Let's go next to not only the next thing on the election docket, what's happening right across the channel, and get more context on the French election. Bloomberg's Caroline Conan joins us from the annual Aix-en-Provence Economic Conference. Caroline, what is the mood there?
It's a very strange mood, Criti. You know, usually this conference in Aix-en-Provence marks the beginning of summer. There is a positive mood, but now there is no politicians at all. None of the dozen ministers who usually come here are actually showing up, because obviously most of them are going to lose their job on Sunday. No politicians here, mostly CEOs, and a lot of anxiety on those executives' faces. Because of this uncertainty, I was talking to a CEO just now, and he was telling me there is a huge wait-and-see attitude, because even if we get a hung parliament situation on Sunday night, we don't exactly know what it's going to mean longer term in terms of some of the left-wing policies that could be put in place. As you know, the left wing is now not going to get the absolute majority, so that's one scenario that's kind of avoided for the markets. There are two scenarios remaining. One is a national rally outright majority, even though the latest polls have actually shown that this scenario is unlikely now, or less likely than it was a few days ago. One poll was showing that the national rally would get between 190 and 250 seats. The socialist Raphael Glucksmann has been warning, though, that this shouldn't be a done deal. We should be very careful, or France might just wake up with a huge hangover. Now, the reason why the national rally victory is more unlikely than it was a few days ago is because of this. This is happening in Aix-en-Provence. This is happening in many constituencies across the country. Duels between a national rally and either a left-wing candidate or a Macron candidate. Before, you had a lot of three-way contests, but more than 200 candidates have now pulled out of the race, so there's a lot of duels across the country. Participation will be key. If there is low participation, actually this increases the chances of having a national rally government. But you know, even though Emmanuel Macron has been criticized, everyone knows here that he's put a lot of emphasis on a reform pro-business agenda over the past 7 years. So everybody here in Aix-en-Provence is very worried that this could be over on Sunday. A lot of uncertainty for these executives, whether it's the tourism sector, the banking sector, the construction sector, a lot of anxiety here in Aix today.
All right, Caroline Conan there from Aix-en-Provence talking to us about that mood between some of the business executives and what they're seeing in the French government. Of course, we also know that there will be plenty of other interviews later today from Aix. She'll be speaking with Eurogroup President Pascal Donohoe, former Brexit Commissioner for the EU, Michael Barnier, as well, to digest all the political action in Europe this week. We should also mention very quickly that as we talk about that relationship between the French government and those business executives, Marine Le Pen has been very active in trying to get them onto her side. She's also been trying to see where she aligns herself in broader European politics, which brings us to some confirmation here from the Hungarian government that Viktor Orban is indeed going to be meeting Vladimir Putin. He has just landed in Moscow. This comes after Charles Michel has actively asked him and other diplomats as well to not represent the EU. And of course, Hungary had taken over the EU presidency for 6 months, that rotating presidency starting of July 1st. It looks like he is indeed going to be meeting with Vladimir Putin. Now let's go to some of the economic data we are expecting later today. We are a little under 3 hours away from the June jobs report, expected to have a pretty major impact on the possibility of a rate cut at that September Fed meeting. To preview the data, Bloomberg's Michael McKee joins us this morning. Mike, walk us through what we can expect today.
Well, Criti, I can tell you what economists expect and the street expects, but what do we actually get is going to be an interesting open question. Right now, the consensus of economists is 190,000 jobs were created during the month of June. Some people think a lot of those part-time work. The unemployment rate isn't expected to change, expected to hang at 4%. And average hourly earnings are expected to tick down just a little bit, and on a year-over-year basis come up at 3.9%. And the decline would be good news for the Fed there. They've been worried about inflation in wages continuing to push inflation higher. But take a look at what has happened the last couple of times. In particular, last month, the forecast consensus from economists was 180,000 jobs. The whisper number on Wall Street was 168,000 jobs. So Wall Street was more pessimistic than the economists, as they are today. But look what we got, 272,000. So we could be in for another upside surprise. Nobody really knows how to forecast the labor market these days.
I mean, Mike, I got to say props to you for showing up on the Friday after the 4th of July. A lot of folks are saying, though, that there aren't that many people at their desks actually trading this. The eyes are really all going to CPI on Tuesday. What do you make of that?
Well, that's certainly the case. The holiday coincides with the jobs report every so often, and we do get more volatility on those days because there's less volume traded. A lot may depend on what happens with unemployment this time, because that's what the Fed is looking at. There's something called the Sahm rule. Claudia Sahm, former Fed economist, came up with that when we see the 3-month moving average of unemployment half a percentage point above the lowest 3-month moving average of the prior 12 months, it triggers a recession. And it's kind of always worked. But you can see how close we are to that level right now, although it would probably take about a 4.4% unemployment rate for us to get there. But if we did get there or got really close to it, it would make people on Wall Street nervous and would drive a lot of trading, at least on Monday after today. But then you're right, the CPI is what people are concerned about because it's the inflation that the Fed has been worried about. If that continues to come down, particularly if we get a weak result today, then that'll certainly increase the odds of a Fed rate move in September, according to Wall Street.
All right, Bloomberg's Michael McKee. We will leave it there. Of course, all eyes on the payrolls report. He'll have full coverage for us coming up at about 8:30 a.m. Eastern time. We thank him so much. Of course, as we watch for that market reaction, at least that's been the conversation here in Europe. What impacts the markets more? Is it going to be simply the geopolitics that you're seeing, the change in government here in the UK, or that anticipation ahead of the French election as well? That puts that at direct conflict with the payroll story as well. Eurodollar is my favorite pair to look at for there. 108.26 is where we're at there. Seeing some strength into the euro. Does that payrolls number picture change that, specifically as we talk about those bids into the dollar, or perhaps not, based on whether or not cuts are indeed priced in? A quick check on some of the other metrics as well. FTSE 100 higher by 0.2% off of the heels of that labor victory. But look, it is light liquidity, light volume. It is the normal that we tend to see post-holiday as well. So really take that kind of autopilot story in regard. S&P futures virtually unchanged as well. 55.92 is another one that we have to keep an eye on. As we talk about the geopolitics and the politics, of course, on this side of the Atlantic, I should also mention that Keir Starmer is expected to speak in about 90 minutes. So we just heard from Rishi Sunak leaving 10 Downing Street. He and as well talking about not only leaving the prime minister role, but also stepping down as leader of the Conservative Party. Now we're going to hear from Keir Starmer as he moves in to 10 Downing Street, what he means for the first 100 days. We're going to be talking about the relationship with Europe, talking about planning in terms of housing. We'll also be talking about deregulating some of those financial services and how the market all prices it in. Now, before I leave you, I just want to quickly mention it is the largest European banking deal we've seen. BBVA has, of course, approved that capital increase for their Sabadell takeover. We will keep you apprised of all the headlines and more. That does it for Bloomberg Brief. Surveillance is ahead with Manis and Danny. Context matters on Bloomberg.
my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
What's the key trigger going to be for us to say, okay, that growth is turning into a real growth scare or potentially recession fear? It's the labor market.
What I see from the data is certainly a loosening in the labor market.
I think the risk is that the unemployment may rise a little bit, not a lot, but a little bit from here.
We may be at a kind of inflection point in the labor market where you're actually going to see more weakness on the unemployment rate.
You can have two things be true. We have a good labor market, and it is weakening.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Things are going to look a little bit different this morning. Good morning from our New York City studio for our audience worldwide. This is Bloomberg Surveillance. The 4th of July holiday ends abruptly for Jobs Day in America with stocks at an all-time high. I'm Danny Berger, taking the reins with Manus Cranny this morning with John, Lisa, and Anne-Marie, probably out there on a beach somewhere enjoying the rest of the 4th of July holiday. For the rest of us, Manus, I think it should be made clear we did not draw the short straw this morning. We get the privilege of walking everyone not just to the weekend, but to Jobs Day. 190,000 is the estimate.
Yeah, and debating whether there's going to be a step down by a sitting president here in the United States of America, a regime change in the United Kingdom. And of course, what we're going to see here is whether we are really at some kind of tilt or an inflection point on this jobs report. As Mary Daly said, we are coming closer to that moment in time, and there's the data that we expect.
Yeah, the lowest estimate, Goldman Sachs, 140,000. But Manus, that is it. You hit the nail on the head. It is this idea of an inflection point. You can even kind of hear that in the language people are using to talk about this Jobs Day, about what they care about. Previously, we would have talked about wages, right? How hot are they going to come in? What does it mean for inflation? The language has now changed, though, that it's not necessarily about that. It's about the unemployment rate. Last Jobs Day, it surprised us by being 4%. 4.1%, Manus, is what we would need to trigger the SOM rule. So it's that deterioration. Is the labor market going to be more important for the Fed and force their hand to cut?
Well, suddenly the dual mandate will rise in its importance. And the three big alphas of the job gains over the past year have been healthcare, government, leisure, and hospitality. And of course, a great deal of the immigration numbers have gone into shoring up those sectors, especially in leisure and hospitality. I think when it comes to the whisper number, we've got, what, 185 on the Bloomberg terminal at the moment. But I think, as you say, suddenly you're going to hear this tail risk, the really, really left tail risk that was recession that nobody has talked about. It's going to morph into a narrative, something around the soft landing. And this is something that we had discussed with our guests last week. What is a soft landing? And if it is a soft jobs number, services were low, what is that going to do to the momentum from the bond traders? Because they have been whiplashed like hell for the past 7 days.
And will it do anything to this equity market at all? That is a runner get-around train. 33 all-time highs on this equity market. Let me show you how things stack up heading into the jobs day today. We are looking at basically unchanged for S&P 500 futures, 0.01% higher. Euro versus the dollar. Dollar weakness today with calm after UK politics. The 10-year yield, Manus, we are down 1.5 basis points. And this is what you were hitting on that I think is fascinating. The bond market has been captivated by politics. Post-debate, this idea of do we need to price in a Trump? The ISM data threw that into disarray. The weakest services ISM data that we have seen since the heart of the pandemic, that hang on, maybe we need to back off on this trade. Perhaps yields should be lower. But with the uncertainty of this weekend of Joe Biden speaking to George Stephanopoulos on ABC, trying to really defend himself, I mean, it's anyone's guess where we land on Monday about what this political environment looks like.
He's got to do an awful lot in that interview to shift the narrative, because Trump is ahead in the polls. People are saying Kamala Harris should be handed the baton. She is a better proposition. But when it comes to these bond markets, it's as if, you're right, we did this pivot from being politics that drove the burst steepening to the data which reinvigorated the bond bulls. And the question is as to what do the bond bulls need to see from this jobs data to take them through 425? We're in a bandwidth. We're in a classic trading bandwidth. 425 bid, 450 offer. What is it that breaks 425 with momentum? We've heard various people say pick up duration on this spike in yields, but don't forget that whiplash that they have felt from the burst steepeners last week is something today that we've probably got to be a little bit more cautious about.
Well, there's an asymmetric risk, Manus, because the high-frequency data has showed some of that softening. So I think this is a market that's prepared to see more softness. So what happens if we get another hot jobs print? But maybe the haven for us all today, as we are waking up here in the U.S., is the UK. Results as expected. Labour absolutely trounces Tories, which, let's be honest, is probably the most successful political party in the past 150 years, losing grip of their power in the UK.
Not just losing grip, but essentially wiped not completely off the political face. They're still going to be the main opposition. I think what is interesting in the numbers and the results is that there has been such a monumental swing by the general electorate to the right, to the Reform Party. Many people here will recognize Nigel Farage as being an ally of Donald Trump. And the momentum in terms of public votes that went to Reform, Labour have got the majority in the House of Commons, but it is wide and thin. I think that's the phrase that came through yesterday evening as the results came through.
And the reason I think this is so interesting is this idea of how big of a mandate do Labour have at this moment, if it is that thin majority. Rishi Sunak had been out campaigning before the results saying, don't hand them a blank check. Essentially kind of tilting towards that Liz Truss idea that if you hand them a blank check, they could do something that upsets the bond market. But there is a clear check on them. And it is this bond market. Nobody wants to be that prime minister that comes and is eventually kicked out because of the bond market. So they didn't even need this trouncing to be more, excuse the pun, conservative in their outlook for fiscal policy, because they know what will happen. They don't want a repeat of Liz Truss.
They've been very, very clear about what their borrowing requirements will be. And there are fiscal rules in the United Kingdom that in some ways handcuff the Labour government, the incoming Labour government. What will they do with the fiscal framework? Will they change the fiscal framework and sell it to the gilt market as being we're going to borrow, but we're going to borrow for very, very focused investment? Howard Davies, the former chair of NatWest, was with Francine, and that was the point that he made. Labour have a target of 2.5% growth. That is just fantasy. According to the people that we've interviewed so far, 2.5% growth is something that's going to be difficult to attain. Sterling's on a run higher. The gilt market likes it. For now, the UK is a bastion, a mini haven in a European dislocated picture.
What a world. Who would have thought that we'd be talking about that?
What a time to be on surveillance.
We'd be talking about UK stability. Well, we're going to discuss that and more with our guests. Coming up, we have Peter Oppenheimer of Goldman Sachs, with stocks rising and hitting new records across the globe. John Lieber of Eurasia Group as pressure mounts for President Biden to end his re-election bid. And Sarah House of Wells Fargo expecting a cooling U.S. labor market. We begin this morning with our top story. Global stocks trading at all-time highs ahead of the U.S. payrolls report due at 8:30 a.m. Eastern. A string of softer economic readings has been boosting bets for the Fed to start cutting rates in September. Peter Oppenheimer of Goldman Sachs joins us now. Peter, great to speak with you this morning. First of all, what are you expecting from this jobs data, and will it even matter for equity markets?
Yeah, firstly, look, our economists are forecasting 190,000, so that's below the consensus, and importantly, below the 3-month average that's been just under 250,000, and reflects this sort of cooling that you've been discussing. And I think it does matter. It matters because alongside some of the other macro data in the US, you're seeing more of a macro softening broadly. That's reflected in our own macro surprises index, which has turned negative. And of course, to some degree, that raises the expectations that rates can be cut earlier, and that seems supportive of equities. But I don't think it's necessarily should be interpreted that way, because if the economy is weakening, that's going to raise concerns that earnings might be a little bit weaker moving forwards. And of course, as you say, equities are running hot at all-time highs, and indeed the market is extremely concentrated. So I think this data is going to be very important, very closely watched by the market.
Peter, you make an excellent point that the market will judge this as bad news is good news, but you're saying that, look, it's not necessarily good news. So if we do get weaker data coming in, what in this market looks mispriced? Because the gains have been led by the top, by NVIDIA, by the big tech stocks. So what needs to adjust to a softer economic environment?
Well, I think the points to emphasize here are just how concentrated the market has been. You know, the biggest 5 super large tech stocks have driven 60 or more % of the market gains in the S&P just this year. You know, huge differences in the returns, and of course the valuations of those companies relative to the rest of the market. The rest of the market is reflecting more broadly the overall economic conditions. And, you know, a softening is going to lessen expectations about what can be more broadly achieved. The hope would be, of course, that rate cuts would be forthcoming. We do think that that's going to happen and that inflation will moderate. But as you and Manus were discussing earlier, on top of this, there's a political dynamic and a focus on the deficit, which is rising, not just in the US, but many other places. And that's really putting some upward pressure on the longer end of the yield curve, which has a big impact, of course, on the cost of capital. So it's a bit more of a tricky mix moving forwards relative to what we've seen over the last 6-8 months. Remember, global equities from the October trough last year, as you started to get more optimism about rate cuts and soft landing, have gone up more than 30%. So from that base, I think things get a little bit trickier. We're looking at much flatter markets with more differentiation over the next few months.
Peter, good morning. So a little bit more differentiation, but then when I look at the top end of the market, as Danny says, Mag 7, 37% of the R&D will come from them, 23% of the free cash flow, 16% of the capex, and a $200 billion AI hyperscaler program to come. You've got dividends and buybacks. The differentiating theme in growth now is something different, fundamentally different, perhaps to what we've experienced in the past. Do you think it is time to still remain fully invested at the top end of the market, or is it time to lighten up a little bit? Given those kind of numbers going forward, it's going to be difficult to step back from major exposure to that Mag 7, isn't it?
It is, and these companies are phenomenally powerful for all the reasons that you said, and we've argued that they are not reflecting irrational exuberance and they're not in a bubble. The valuations in aggregate of these super large tech stocks are considerably lower than the equivalent largest companies in the tech bubble in the late 1990s or the Japanese bubble in the late 1980s. But nonetheless, EV to sales of the big 5 tech stocks have gone up to about 8 times compared to around 3 times for the rest of the market. And while these are fundamentally very, very strong, of course, with this degree of concentration, there is more risk in the market for any potential disappointments, particularly going into the second quarter. So the strategy that we've had really is more diversification across asset classes, across regions, and also across styles. So we've liked quality, strong balance sheet, high margin growth stocks, which include large tech and healthcare, for example. But alongside that, also looking at value parts of the market where you're actually seeing some very good compounding cash flow and dividend payments. So it's been an interesting year of mixes. You've seen super large US tech doing extremely well. And at the same time, you've seen, for example, European banks perform extremely well this year. These are really at the very opposite end of the growth value axis, a mix that we really haven't seen for a very long time. But I really think it speaks to greater differentiation and more diversification as being a crucial strategy that investors should follow.
Well, let's step into the dark side and talk about diversification into the UK. Obviously, it's a landslide. I think, as somebody said, it's Starmageddon in terms of the UK. Labour will take the mantle. The markets seem to be taking it very much in their stride. There's no shocks here at the moment. Sterling's on a roll. UK equities are higher. From the global flow of money, does the UK offer an alternative, a new and different alternative under Labour relative to, Peter, the past 8 years, let's say? There's imagery of Keir Starmer. Do you think the flow will materially change into the UK as a form of diversification, sir?
I do. Partly it reflects a good opportunity from a value perspective. You know, let's be clear, the UK index, the FTSE 100, which doesn't have any large cap tech in it, and for that reason, partly has been a structural underperformer, has a good mix of highly cash generative value sectors, banks, healthcare, miners and resources, energy, for example, sectors that we like. The free cash flow yield being generated in the UK market is over 6%, pretty much the highest in the world. And the PE is around 11.5 times, half what it is in the US. And these companies are paying dividends. So from a valuation perspective, it looks really quite interesting. But in addition to that, the political outcome here is extraordinarily powerful mandate, because you have a very large majority in a government that has preset its fiscal rules, as you said, Manus, and therefore there isn't the same sort of concern about a significant shock in the bond market. And of course, that big majority and therefore the prospect of a stable, relatively centrist economic fiscal mandate looks very unusual at the moment in the world that we're in, given what's happening in other countries. And that, in addition to the valuation attraction, I think is bringing down the risk premium, and we're seeing some inflows coming in, and certainly a lot more interest in UK assets.
Peter, we'll spare you of having to talk about U.S. politics. Peter Oppenheimer of Goldman Sachs, thanks for joining. Enjoy your weekend. UK stocks up 0.25% this morning. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Hakez. Hi, Yahira.
Hi, Danny. Hamas broadly agreeing to the framework of a ceasefire proposal with Israel, according to a senior U.S. official. That framework may provide the basis for an agreement that would lead to the release of sick, wounded female and older male hostages from Gaza. Israel is sending negotiators to Qatar to try and finalize an agreement, with U.S. officials also set to take part. The progress coming as Israel weathered a rocket attack from Hezbollah militants across the Lebanese border, raising fears of a full-blown regional conflict. Hurricane Beryl is approaching Mexico's Yucatan Peninsula. Storm warnings are in effect along the Mayan Riviera, with alerts stretching from Costa Maya port to Cancun. Beryl has already left a trail of destruction through the Caribbean. It was the earliest Atlantic storm to reach Category 5 strength, signaling an early start and likely an active hurricane season as hot ocean waters fuel tropical systems. That's your Bloomberg Brief. Danny?
Yahira, thank you so much. Up next, Biden not backing down.
The president was very clear that he is in this to win this. And the president is our nominee. The president is our party leader. And the president has told us, and he was very clear back there, that he is in this to win this.
That's coming up next on the program. You're watching Bloomberg Surveillance.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Good morning on this Friday, dominated by politics and eco-data. Under surveillance this morning, Biden not backing down.
We are all looking for the path to win. A path to victory in November is the #1 priority, and that's the #1 priority of the president.
We will stand with the president because we fight that force being Donald Trump, and I felt very confident coming out of this meeting.
The president was very clear that he is in this to win this, and the president is our nominee. The president is our party leader, and the president has told us, and he was very clear back there, that he is in this to win this.
Here's the latest. Top Democratic governors rallying behind President Joe Biden ahead of his interview tonight on ABC with George Stephanopoulos. This is the president's first major interview since last week's poor debate performance, with the calls growing for Biden to end his re-election campaign. Bloomberg's Tyler Kendall joins us now from Washington. Tyler, what is the Team Biden strategy at this point to regain the trust of Americans who watched that debate performance?
Yeah, hey, Danny. Well, new this morning, the Biden campaign is outlining how it plans to reach out to battleground state voters for the month of July. This includes a nearly $50 million media blitz, where the campaign says that they're going to do some strategic investment when it comes to ad buys in key states during some key events like the Olympics later this month, and even the RNC, the Republican National Convention, which is slated to kick off in just over a week. Now, the campaign also went on to describe what they're calling an aggressive in-person campaign schedule over the next month for President Biden and Vice President Kamala Harris. That kicks off tonight as he heads to Madison, Wisconsin, before that interview with ABC News that you mentioned that we're expecting to air later this evening. He's then going to head to Philadelphia over the weekend. Of course, both of these two critical battleground states. And as you alluded to, all of these appearances are going to be highly, highly scrutinized, both on the campaign trail and also here in Washington, particularly as President Biden gets ready to welcome nearly 32 NATO member countries to Washington, D.C. this week as the annual NATO summit kicks off. We are expecting him to hold a press conference later next week where he will no doubt face questions about his viability as a candidate.
Tyler, thanks. A busy weekend and weeks to come. Tyler Kendall there in D.C. John Lieber of Eurasia Group writing this, that President Joe Biden's inability to tame the story about his cognitive decline has prompted Eurasia Group to increase the odds that he will exit the race from 15% to 25%. John joins us now. John, good morning to you. You heard it there from Tyler, the strategy of Team Biden. Get him out there as much as you can. Put him in front of different interviews with ABC. Later tonight, we'll hear that. Have him do Q&As. Give him a grueling schedule. Is it enough?
Yeah, I'm concerned that 25% odds might be low. I mean, Biden has not looked good for a while in public appearances. The debate was just one of many reports we're hearing about what happens behind the scenes. At the G7 meeting, a meeting with congressional leaders, there's just a lot of signs that he's losing a step or three. And his appearance yesterday at the 4th of July at the White House was fine, was competent, but didn't seem like a politician that was exactly at the top of his game. And the stakes of this interview tonight are going to be incredibly high for Biden. But even if he gets through this, he's got to go through another 3 or 4 months of campaigning where he's got to be out there publicly making the case that he's vigorous enough to last another 4 years. And if he doesn't, he's going to be in big trouble and probably hand the election back over to former President Trump.
John, good morning. What is the smart, political, graceful way out of this? Is this fill or kill weekend in terms of going head-to-head with Trump. There are the polls, 48% to Trump, 42% to Biden. Is the smart, graceful way right now to try and find a graceful exit? Because he doesn't sound like a president that's ready to do that. No one's pushing me out.
Well, every day he doesn't exit the race, the anger, if and when he eventually does, at him is going to be higher and higher and higher. So he should move quickly to preserve his legacy if he's going to step aside. And, you know, it's possible he blows us away tonight, the way he blew everyone away at the State of the Union, making this question go away, at least for until the next incident happens. But if he does drop out, he's going to have to do it soon. The Democrats, you know, they're almost certainly going to replace him with Kamala Harris, the vice president. If he does step aside, that can really happen at any moment between now and Election Day. But the momentum loss they're going to face from him staying in here, not exactly thrilling the voters, is going to be massive. So the earlier he does this, the better off he is and his legacy is.
In many ways, if he does choose to go, or if he's forced to go, or if he's advised to go by his family, as you say, you think it's the family and the inner court of Biden that will drive him to make this decision to exit rather than the Democratic Party. How much of a poison chalice is it for anybody else who takes it, apart from Kamala Harris? She gets the money. She gets the money transfer. She can get the black vote out, the female vote out. She is strong. She's strong, polling strongly. She is the obvious candidate because everybody else, this is a poison chalice.
Yeah, I think that's right. I mean, I don't think you're better off picking somebody with lower name recognition than Harris, who has not been tested on the campaign trail. So for somebody like Gretchen Whitmer, who's got a really promising political career in front of her, or Gavin Newsom, who, you know, this would have been his moment to run in a normal cycle where Biden decided to drop out earlier. You know, these people have long political careers ahead of them. Losing to Donald Trump in 2024, not exactly a way to set that up. And they probably start off at a disadvantage because no one knows who they are. Whereas Harris can kind of step into the race. She can sort of mop up the mess, clean up on aisle Biden, get through. Whether or not she wins, and she wins, that's fantastic. If she loses, you can't really blame her. She did what she had to do. She can always come back in 2028. So I think for just thinking about the personal incentives of any of these people, Harris has the least to lose from being the nominee.
John, we have only a minute here, but the strategy from Donald Trump has been stay quiet, well, relatively quiet, and let the Democratic Party implode. If Biden steps down and someone else takes the reign, can Trump still afford to do that? Can he make this a referendum on a chaotic Democratic Party?
Yeah, absolutely. I think Trump's been running a very disciplined campaign so far. He hasn't really been drawing attention to himself the way he would have in, say, 2016, and he's let Biden be the main character of the election, which is exactly what he needs to do to win. If Harris comes in, he's going to have to quickly define her in the eyes of the American people as too progressive, as, you know, a party to all the inflation they've been experiencing, and basically Biden part two. I don't think that's going to be terribly hard for him, but you'd expect to be him out there more vigorously trying to define her in that situation.
John, appreciate it. Enjoy your weekend. John Lieber of Eurasia Group. Okay, coming up, the latest from London as Labour emerges with a landslide victory in the UK. What sort of fiscal agenda will they present to the public? Are the risks over? We'll discuss here on Bloomberg Surveillance.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
2 hours until your jobs data hits the tape. At the meantime, equities trading again at all-time highs, only a little bit higher, but if we do that, we're going to be at our 34th record for the year. Meanwhile, NASDAQ 100 futures, it's the same old story. Tech takes the reins, while Russell 2000 futures fall by 0.2%. Let's flip up the board. Look at this bond market. Bonds under pressure. They were under pressure after the politics, and then they get a bid thanks to ISM data. It is a whipsawing market, down about 2 basis points across the curve, save for the 30-year, down 1.5. Under surveillance this morning, pressure mounting on President Joe Biden to end his re-election bid. A growing number of donors saying that they will not back the campaign unless Biden bows out. Disney heir Abigail Disney joined Netflix co-founder Reed Hastings, who is also calling for a change on the Democratic ticket. And man, it's not just some of these Democratic donors, it is Congress people themselves. Yet another House Democrat came out against Biden as nominee, Seth Moulton of Massachusetts, saying when your strategy isn't working, it's rarely the right decision to double down. President Biden is not going to get younger.
No, I mean, there are some very, very obvious facts about his acuity at the moment. He's got this interview this evening on ABC. Can he do something to materially change the narrative, engage with the ABC presenter, George Stephanopoulos? I think what you have here, we've just had a conversation with Eurasia, and they say the probability, 25% probability of him stepping down actually looks low in terms of who will drive that narrative, this fill or kill weekend, which some people are saying we are in terms of remaining in the race. That will be by an inner circle. That will be by Biden's family. That will be by the real inner advisors. And interestingly, not necessarily the Democrat cohorts who may sign a letter asking for him to step down.
The thing is the Biden campaign has really been focusing on his mental acuity, saying we can prove that this was a one-off. But The Economist is running with a front page over the weekend saying that it is not the issue of his mental acuity. Instead, it is the operation by his campaign to deny what tens of millions of Americans saw. That essentially it is a bell that can't be unrung, because the problem is not his mental acuity. Again, it's a problem that the campaign essentially lied to the American people, saying, yes, you might have seen him stumbling, but that is not President Biden. And that is what they lay out as the real error. And how can you fix that? Just by having a good interview or going out on the campaign stump a lot?
Well, again, the Trump campaign has been, and even if you know, obviously the previous debate was very, very obvious. There were rules and regulations in terms of interjection, but Trump comes out and asks again for a head-to-head, no holds barred, one-to-one again, mounting the pressure that that's the forum that they want to try and challenge Biden to step into again. And that is everything that the Democrats do not want. They do not want an open-ended, no-holds-barred discussion for Biden to step into.
Well, before we can get to that, Manis, we have to get to the economic data. Under surveillance, the U.S. labor market is expected to show more signs of cooling, with the June payrolls report due in about 2 hours. The median estimate in Bloomberg's survey expects 190,000 jobs added for the month of June. That is a drop from the 272,000 added in May. Manis, it is a step down, but let's be honest, the concentration is on the unemployment figure at 4%. 4%, that was the real rub in last month's. 4.1%, if we get there, would trigger the Somme rule.
Yeah, and this march higher in unemployment suddenly raises the dual mandate. And again, you've heard this. Powell talked about the jobs narrative when he was in Portugal a little bit earlier this week at Sintra, the gathering with all of the central bankers. Mary Daly talks about a tipping point or that inflection point in the jobs market. But what level of unemployment? So this is then you extrapolate forward. What level of unemployment do you need to see before the end of the year to invoke 2 rate cuts? And it is the jobs report which is going to drive more than the inflation report on the scenario for cuts.
I think that language that you're talking about from Powell, from Daly, gets even more interesting with the hindsight of the Fed's minutes. We got those out before we all, went to go see the fireworks. And they made it clear that the bar to cut is really high. Some of them talking about even raising rates. Yet again, they even talked about the politics, the fear of that. But let's keep in mind, that June meeting was at a time when the Atlanta Fed nowcast was something like 3.1%. GDP now, tracked by them, is 1.5%. The Doves aren't saying, Manus, that they are ready to cut, but they're getting louder and they're getting more bold. So what happens when you have a weak jobs data in hand is, a lot of people expect we will.
I think what it'll do is it'll reinvigorate, the bond bulls who almost were off the leash and running, and then they got this politics. Look, data trumped politics in the first 3 days of this week, and you suddenly saw not a capitulation, but a shift from Bear steepeners, which was a rise in the long end, to suddenly going, wow, services, the biggest drop in 4 years. Suddenly the narrative shifts to a slowdown, a soft slowdown, rather than just a soft landing.
Soft slowdown. Soft but not softer. I need to get these things right. Soft cube. Okay, writing it down in my notes. Meanwhile, Keir Starmer is set to become the next UK Prime Minister after Labour's landslide election victory. The results bring an end to 14 years of Conservative rule as Labour clinches a majority in Parliament. Starmer is expected to speak in just under an hour from 10 Downing, and that's where Bloomberg's Tom McKenzie is now. Tom, great to speak to you this morning. It has been a busy 24 hours for you. Tell us what sort of mandate that Labour now has in their hand to rule.
You talk about the landslide victory. That is absolutely what we now have for this incoming Labour government. What we do not have is the super majority that many of the polls had actually predicted. It was the best result, yes, for this Labour Party since Tony Blair in 1997, but it did not best Blair, who came in with 418 seats. It looks like this Labour government's going to have 411, 412 or thereabouts, give or take. There's a few more seats to come through. They do, of course, have a significant mandate on the back of this, and it is a marked turnaround from those events of 2019 when, in fact, the Labour Party had their worst electoral outcome since the 1930s. But on some levels, this is a rather thin consensus that's come through in terms of the majority for this Labour Party. And they're constrained as well by the fiscal constraints that face this country. Growth expectations are below 1%. We know that debt to GDP is closing in 100%. The first 100 days, of course, are going to be crucial. So watching for that. The future Prime Minister, Keir Starmer, the incoming Prime Minister, will be speaking, as you said, behind me, 10 Downing Street, in about 30 minutes' time. Rishi Sunak left about an hour ago for the last time, 10 Downing Street, and said that he has respect for Keir Starmer. He also apologised to his team.
Well, there's not much time for British politicians between victory and the hell that is exit in politics. They go in the space of 24 hours, out the door with your bags. One thing for certain, though, Tom, is global markets. We're sitting in New York at 6:36 a.m. in New York. It is the 5th of July. Here we are, the flow of money. Right now, sterling looks healthy. The gilt market has not convulsed at the moment of Liz Truss's policy under the Tories. What is it in this honeymoon period that Starmer must convey to markets to deliver a flow of capital and upscale the flow of capital to the United Kingdom?
Starmer and his incoming Chancellor of the Exchequer, Rachel Reeves, have emphasised time and time again that growth is their priority. Starmer put out there he wants to get back to growth of 2.5%, the kind of growth we saw under the Blair years. For many, that seems a stretch, to say the least. So look for them to reiterate that view, particularly when he comes out with this speech in about 30 minutes' time. But make no mistake, this is an interventionist manifesto from this Labour Party. They want to create a British energy company. They want to rip up planning rules to allow more building of homes. That is going to be a priority in the next 100 days. They're going to be focused on renewables. They're going to be spending a little bit more around the edges. They're not going to be overspending. That's the commitment they've made, given where we are in terms of the debt to GDP and the deficit levels. But he will need to come out with that reassurance. So far, the pound is up 7 straight days. The markets are reassured. Jeffrey's putting out a note, though, saying that there is stability now with this majority for Labour. Longer term, though, Jeffrey's pointing out that potentially there's a risk, given that underneath the surface you've seen big gains for the right-wing Reform Party, the Green Party as well, and the Liberal Democrats. The rewiring of the electoral system here in the UK could pose risks further down the line.
And this is the big risk to Stramageddon, is that it could be one term and done. He's got to bring the country with him. He's got a wide but thin majority, and there is a rise to the right. Nigel Farage, for our viewers, is a confidant, close to Donald Trump. It really was a shift in the mandate from the British people, not necessarily to Labour, but away from Labour and onto the right.
Absolutely, Manus. This is an awkward coalition in many ways for Keir Starmer, because he's taken seats in the south, he's retaken seats in the north of the country, constituents who have very different demands of him. And you point out Nigel Farage, it was a very big win for him and the Reform UK party. Let's not forget, Labour came in and took 34%, just 34% of total votes. And the gains coming through Reform, the gains coming through the Green Party, and a very big night as well for the Liberal Democrats. Now, to Farage, he came out and said, we are targeting Labour next. And I think that is really consequential. What is also consequential is how the Conservative Party reforms. Rishi Sunak says he will remain leader until there is a transition. You can imagine the horse trading around who's going to take over from this diminished Conservative Party is already underway. But what kind of Conservative Party do we get on the back of this? Is it a centrist one, or does it move to the right? Does it absorb Reform UK? Is there a coalition between those two parties? That is something to watch going forward. This is a majority and a sweep for the Labour Party, but it is built on thin foundations.
Tom, I know you're getting rained on, so I'll make this one quick. But for this market, looking at the results today, is there forever a check on the Prime Minister living with the ghost of Liz Truss and the blow-up of the gilt market?
That has to remain, doesn't it, particularly in this environment. Look, Bank of America says fund flows are coming back into UK assets. We've seen that stability, the upside coming through for the pound. The BOE could come through with a cut in August. That would be a nice fillip, wouldn't it? A nice upside surprise, a gift maybe for Keir Starmer when he takes over, and as he remains, of course, and he moves into 10 Downing Street behind me. But yes, look, there will be, embedded in the UK asset story is the shock that came through from Liz Truss, who, by the way, lost her seat as well, and the marked move that we saw in the gilt markets. That will constrain the politics of this new government. The fiscal wriggle room for them is narrow. The markets, for now, are taking reassurance from the fact that this is a Labour Party that has taken the lessons from Liz Truss and will ensure that it's constrained in terms of its budget. We'll look ahead then to the first 100 days, but then to the autumn statement. Could be September, possibly October, from the Chancellor, Rachel Reeves. The investors I've been speaking to so far this morning saying that for them is key. Will she match the rhetoric leading up to this vote with reality when it comes to the autumn statement towards the end of this year?
Well, Tom, we don't want you pulling a Rishi Sunak getting drenched outside of 10 Downing Street, so we will let you go. Stay dry. Bloomberg's Tom McKenzie. And Manus, you know, talking there about sort of the more conservative approach, not conservative big C, but small c, from the Labour government, I can't help but wonder, if not, is some of the downside priced in, but is some of that upside priced in? A government that maybe doesn't move away from Brexit, but is more friendly towards trading partners. Is there an element of that we have yet to appreciate? So from here on out, it could be an upward surprise.
Well, I think we've just had that conversation with Peter Oppenheimer from Goldman Sachs, and he talks about, you know, a little bit more dependability, a little bit more assurity in terms of what the plans are. Labour have been pretty clear about what their fiscal agenda is and how they intend to get there. And as Howard Davies, the former chair of NatWest, said a little bit earlier in programming, this is about selling to the gilt market that you are borrowing. You are borrowing for investment, not for profligacy. And in that context, the gilt market may not convulse in the same way as Liz Truss was selling a version of fiscal largesse for growth. That convulse. This is a different version, but growth of 2.5% is somewhat of a fantasy.
What do UBS call it? The island of stability?
The island of stability.
The island of stability. I love that. Okay.
I mean, no longer the basket case post-Brexit. There you go.
Who would have thought? All right, let's get you an update on stories elsewhere this morning. With that, and your Bloomberg brief is Yahira Haquez. Hi, Yahira.
Hi, Danny. The owner of Saks Fifth Avenue is acquiring Neiman Marcus Group for $2.65 billion in a deal that will unite America's two largest high-end department store chains. Amazon and Salesforce will help facilitate the deal by Saks owner Hudson's Bay. According to a statement, the tech companies will take minority stakes in a new company called Saks Global. Hudson's Bay will also finance the deal with $2 billion raised from investors, and affiliates of Apollo Global Management are providing $1.15 billion in debt financing. And gold is headed for back-to-back weekly gains on expectations that the Fed will trim interest rates before year-end. Spot gold traded above $2,363 an ounce. That's after rising by more than 1% this week. Silver also getting a boost from the upswing, advancing back toward $31 an ounce. And Bitcoin is sinking for a fourth consecutive trading session. The digital asset fell as much as 8.1% to the lowest since February, trading around $54,300 earlier, though it has recovered some of those losses. Bitcoin hit an all-time peak of almost 74,000 back in March as it saw strong demand after ETFs for the token were approved. But inflows have since faded, taking Bitcoin lower and dragging the rest of the digital asset market with it. That's your Bloomberg Brief. Danny?
A tough market for the Bitcoin bulls. Yahaira, thanks so much. Up next, in search of a soft landing.
The data that matters the most, in our opinion, ultimately is unemployment, the labour market in general. That is the spine of the economic cycle. Unless we see the jobs market picking up again, it still looks to us to be an economy which is losing speed.
We start your payrolls countdown. That's next. This is Bloomberg Surveillance.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities
could face bigger challenges when was elected.
Was going to keep rain World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Less than 2 hours away from your jobs data. 190K is the estimate after 272 last month. The equity market stacks up as this. S&P 500 futures basically unchanged, 0.3%. Euro versus the dollar, again, little change there, but some strength coming through from the euro with the stability for now of European politics, with the national rally getting a smaller share in the latest polls. Meanwhile, U.S. 10-year yield down by 2 basis points with oil markets unchanged. Manis, I found this interesting from Piper Sandler on Wednesday, talking about the equity market reaching yet another all-time high. They have dropped their coverage of the S&P 500, saying that talking about the S&P to communicate investment insights to institutional investors has become an exercise in futility. So someone not even covering this anymore. You can feel the palpable frustration of people trying to divine where this market goes next when the air is increasingly thin.
You just look at some of the calls that we've had recently. You know, Julian Emmanuel at 6,000, Laurie Calvasino last week, she was nervous about her raise to 5,700, talking about potholes. We just had Peter Oppenheimer there. And the flow show, a lot of people have sort of said the hedgies have gone to Hamptons. So some of the, hello to the hedgies.
Everyone has but us.
Everybody's gone to the Hamptons, except for Danny and I. We're both here holding the fort. So it is about liquidity. It is about liquidity in this market. Is it time to reassess where you are? How nervous are you with your hike? But if somebody's actually cutting their coverage in terms of making calls, that just shows you the air is getting thin. And the question is, what is the oxygen that gives you the next lift higher?
Or you could be a bear that just straight up leaves.
There's no bears in this room.
Well, like Marco Kolanovic, he's not working for JP Morgan anymore. No bears, only people who have committed themselves to working the day after a holiday. Speaking of which, under surveillance this morning in search of a soft landing.
The data that matters the most, in our opinion, ultimately is unemployment, the labour market in general. That is the spine of the economic cycle. Broadly speaking, this data has been telling us for a while and continues to tell us that things are softening, things are normalising. So unless we see the jobs market picking up again, it still looks to us to be an economy which is losing speed.
Here's the latest, the U.S. payrolls report due out in just under 2 hours. The median estimate in our survey calling for 190,000 jobs added in the month of June. Sarah House of Wells Fargo writing this: we look for NFP gains to downshift to about 150K monthly pace over the next 12 months amid a smaller contribution from recent industry standouts and diminishing appetite for employers to hire more broadly. She's also not in the Hamptons today. Sarah joins us now. Sarah, really great to speak with you. So what's going to be the focus for you heading into this jobs report?
Yeah, so I think obviously the overall rate of payroll gains, given that, is still, for I think all of its perhaps overstatement of the overall strength of the jobs market, is still probably the best measure of hiring that we have. But I'll also be very interested in what's happening with the unemployment rate. So we've seen that move up from a low back in last April of 3.4% to 4% today. And I think that's one of the clear indications that we are seeing conditions in the labor market soften. And so I think it'll be very key to see what that does today and whether we maybe get a little bit of a dip back to 3.9% as we expect, or if we continue to see it at 4% or maybe even higher, emphasizing that deterioration in the jobs market we've seen across a lot of other indicators besides payrolls.
And you've also, after this high frequency data we've had, revised down your call. It was at 200, you're at 185 now. Sarah, is 185 enough to cement a September cut? What does the jobs data need to be looking like to suggest that deterioration that causes the Fed to move?
Well, of course, all Fed officials will tell you it's about the totality of the data. So it's not just what's happening with the labor market, but what's happening with inflation. But I think a number around 185,000 would be a clear indication that you have seen the rate of hiring step down. So over the past 12 months, we've averaged about 230,000. So over the past 3 months, it's even stronger than that. And so I think that would be an indication that the jobs market, it is cooling. And while inflation may still remain the Fed's #1 concern, I think they are having to grow increasingly watchful of what's happening in the jobs market to make sure that they don't overshoot on the downside and they don't get any untoward weakening in the labor market.
Sarah, good morning to you. It's Manus. Obviously, government has been a huge alpha here. Healthcare has been an alpha. Leisure and hospitality has been a big driver. Do you think this could be the last of the summer wine? In other words, one last hurrah with our wealth, with our dissipation in savings post-COVID? Is this sort of like the swan song for the jobs report on those three big pillars that have driven growth in jobs?
So I think we'll continue to see some outsized strength in those three sectors that you mentioned. So healthcare, there's still a lot of secular demand there. Government hiring, so we still seen state and local balance sheets in particular in their finances, and that's about 90% of government hiring, is still in relatively good shape. Leisure and hospitality is still below its pre-COVID trend. So I think there's still a little room for those industries to provide some outsized support and limit payroll growth from slowing dramatically dramatically, but it is getting harder for each of those three to put up the sort of gains that we've seen over the past year, which has led to them combined contributing to almost 2/3 of job growth, even though they're closer to about 1/3 of overall employment. And so I think when you layer that on with the broad weakening in demand that we're seeing in other sectors, it does point to a downshift in overall hiring in the coming months, which is going to be important for how much consumers can keep spending from here if we're not seeing the same sort of labor market earnings.
Look, we're consumed by politics, more and more so. We've had the sort of the left tail shock from the Biden-Trump debate. We're now debating whether Biden will be on the ticket, etc. And one of the big issues in economics is if there is not just a Trump in the White House, President Trump in the White House, but a Republican sweep. Adam Posen was with us last week, and he talked about the serious risk of massive removal of immigrants from this country, anywhere from 1.5 million through to 7.5 million. So as you cast forward to 2025, are you more concerned about supply shock to the employment scenario or a demand shock?
So I think when we look at the overlay of the political situation in the upcoming election, so I think we do see the prospect of if we were to get a Republican sweep, that's likely to be more stimulative in terms of the fiscal stance, in terms of what happens with the extension of the Tax Cuts and Jobs Act, that I think we would see those extended. And then I think when you layer on perhaps maybe a more restrictive immigration policy, I think between that more stimulative fiscal policy, but that restriction in immigration, it does point to, I think, a little bit more in inflation pressure. So it makes the Fed's balancing act between what's happening in the overall state of the labor market and with its inflation mandate, I think can make that particularly tricky.
I mean, it's a really hard economy to understand. Just look at the news flow. Saks Fifth Ave and Neiman Marcus are merging in part because there's a slowdown in how much people are willing to pay for luxury goods. Yet this weekend, a record number of people are taking to the roads and the skies to travel. What becomes your North Star, Sarah, in this environment for understanding the consumer?
Yeah, so I think we're looking at a lot of barometers. So looking at what's happening with that credit impulse, which we've seen weaken, what's happening in terms of the overall savings rate and how much consumers are spending relative to the income they're bringing in. But I think as we see maybe some of the tailwinds from all the fiscal support we saw through COVID, the credit channel dry up, that it really does come back down to the labor market in terms of how much consumers can keep spending. And so I think that downshift in growth that we're expecting in terms of payrolls, but also in terms of the average hourly wages. So that's going to limit your overall growth in terms of that aggregate income. I think that's going to be really important as we move through the back half of the year in terms of tempering that overall pace of consumer spending, weighing on demand, and I think also helping the Fed's battle against inflation as you do see that demand seize up a little bit more.
Well, that data hits in about an hour and a half's time. Sarah, thank you so much. Sarah House of Wells Fargo. You see that story, Manus, that Saks and Neiman Marcus are merging. Amazon's taking a stake. I mean, they're doing the low-end stuff. They're looking at giving Shein-type products and also getting their foot into luxury, too.
It just shows you sort of the tightness that we're beginning to see on retail. That high-frequency data really does begin to translate down. And, of course, to quote Paul Donovan, that ever-important quote, the hedonism of the U.S. consumer will remain strong. Keep on spending, keep on going. I'm part of it. I believe in it.
Yeah, well, we'll see if the